6,000 individuals recruiting, and Pfizer told us on the 5th of September that they're at 25,000 already. So my estimate is that at that pace, by September 09, they'll be at 30,000. And by October 7th, you'll be at the point where they start measuring data for the whole group. So if those are right, you could get some evidence of data in October. But that really, really is pushing it. And it all depends on how high the infection rates are and all the other nuances which play in a clinical trial.
Sam, we're going to leave it there. Thanks for the update. Always appreciated. Sam Fazeli of Bloomberg Intelligence. Still ahead, a Bloomberg exclusive conversation with Franklin Templeton, CEO Jenny Johnson. Unrelated. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Live from London, I'm Guy Johnson. This is Bloomberg Markets. Franklin Templeton, President and CEO, Jenny Johnson, is the fourth member of her family to lead the investment firm her grandfather founded more than 70 years ago. One of her missions is to attract and retain more women. Bloomberg's Scarlett Fu spoke exclusively to Johnson and asked her how she's trying to work from home and what the goal is.
As a mother of 5 and as the daughter of a mom who had 7 children and then graduated from Stanford Medical School, I think that moms have to figure out how to blend work and home life really, really well, which means we need a little bit more flexibility. And so I think that this whole work life, one is you take out the commute, 2, you can get up and take care of whatever you need to get up and take care of. So I think in many ways it will play to the strength of women. I also think that men have been a little bit disadvantaged. And I know a lot of men that would love to coach their kids, sports teams, and yet they weren't sure that was okay in the office. And so I think this environment's actually going to allow both parties to do more of this integration between home and work. And I think that that's better for everybody.
Do you think the male leaders in finance and other industries see this crisis the same way you do?
So it's been very interesting listening to other CEOs' views about whether this new work is permanent, or are we going to absolutely go back to where we've been? And we have our own question around, sort of what does the office look like? I think the reality is you've got a top performing employee who commutes 3 hours a day, 90 minutes each way, not an unusual commute in, say, New York City, and they're just realized they can do a lot of their job from home. I think we're going to all have to learn to figure out how to accommodate and leverage technology to create those kind of collaboration opportunities. So I don't know quite what the world's going to look like. I mean, it is a debate we have, but I think it's going to look different.
Jenny, you are the fourth member of your family to serve as CEO of Franklin Templeton, to lead the firm. How do you reconcile that and your efforts to promote diversity at the firm with the fact that this is ultimately a family-run business?
Well, so first of all, we're a public company, and while the family has a significant interest in it, we're minority shareholders. We don't own a majority of it. So we have to run it every day as a public company and think about what's right for the long run. I'd say the one difference is that when you have still founders having concentrated ownership, they're really able to think more long-term as far as investments that they make. One of the risks today of public companies is CEOs have so much pressure for quarterly returns that sometimes there's a question about whether they're really making the best long-term decisions for the business. And I can tell you, we operate this company thinking in the long term for the business.
I want to talk a little bit about what happened with the Amy Cooper situation 3 months after that unfortunate incident. I wonder what has changed at your firm. How do you monitor employees' behavior and stay on top of what they say and what they do?
So, part of it is you have to, from the very top of the firm, behave in a certain way and just show zero tolerance for any kind of racism or discrimination. At my core, I fundamentally believe, and I believe their executive committee fundamentally believes, that a diverse workforce is better for us, better at decision-making because you're going to get more views, better because it reflects our diverse client base. And so it's about, for us, continuing to always rethinking how can we ensure greater diversity and inclusion. And as we hired prior to the incident in Central Park, the Chief Diversity and Inclusion Officer at Legg Mason, and Regina Kerr is reporting directly to me as a CEO. That's how important D&I is to Franklin Templeton.
D&I is clearly something that you're very passionate about, and I can hear it in your voice. I can see it in the way you're talking about it. How do you think your lived experience heightens your perception of what's happening on the diversity front?
In some ways, I always feel a little bit, obviously I'm a woman CEO, but I grew up in a household where my father celebrated strong women. I mean, my mother, I think she was one of 10 women graduating from Stanford Medical School. And so, I've always grown up in this environment where there's just somebody who believed in me. And I think that makes a big difference. I was asked by an employee at one point, well, what do you do when you walk in a room and you know that all the men are thinking that you're not capable or, competent? And I said, boy, I've never walked in the room and thought that. And by the way, never let that be in your head.
Fascinating. Franklin Templeton, President and CEO, Jenny Johnson. What do we got coming up for you? We're going to carry on with the conversation that we're having about the price action. Chris Watling, Longview Economics CEO, is going to be joining us. Look, Chris has got this view that some of his metrics are starting to flash warning signals about what the price action looks like. And I'll be fascinated to get his take on what we saw late last week. At the moment, it looks like it could continue into Tuesday when cash opens again on Wall Street. European equities are higher today. It's interesting as well to see the pound lower and the ruble lower as well, and what's happening with Alexei Navalny. We'll talk about all of that next. Chris Watling coming up from Longview. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
London, I'm Guy Johnson. We're now counting you down to the European close right here on Bloomberg Markets. European markets suffering light volume today. It is Labor Day in the United States. As a result, we are not seeing the normal level of trading. However, cash will be open tomorrow. It looks like we're going to see a fairly soft open for the Nasdaq. But at the moment, European equities are very much on the front foot. In fact, near session highs, every single sector is in positive territory. In terms of the number of stocks that are up in the Stock 600, 542 versus 57 that are down. Just in terms of the sort of harbingers for the cash open tomorrow on Wall Street, it is worth noting that the CSI 300 over in China finished down. Quite aggressive tech selling in the last hour or so, worth bearing in mind. Bitcoin also softer as well. That could be a useful lead indicator. In terms of where we are in the currency markets, the pound is down today. We'll talk more about what is happening in the UK in just a moment. And the ruble is under pressure. Why is the ruble under pressure? Well, Angela Merkel, the German Chancellor, appears to be linking Nord Stream 2, the gas pipeline that is yet to be fully completed, with the poisoning of Alexei Navalny. Some suggesting that maybe we could see that project halted or maybe not used. But certainly the link between the two providing, I suspect, some consternation in Moscow. But as I say, the pound under pressure. The UK is preparing for Brexit talks to fail and is planning new legislation that could potentially override key parts of its withdrawal agreement, as the UK Foreign Secretary Dominic Raab calls for a moment of reckoning.
It's a wake-up call for the EU side. We've got to a position where there's only 2 points, really, that are holding us back. But we can't accept that the EU will control our laws. That's the reason we're leaving. No other country goes into free trade negotiations with the EU or with anyone else on that basis.
Bloomberg opinion columnist Therese Raphael joining us now. Is Boris Johnson now basically signalling that he's prepared to accept a no-deal Brexit? He's basically sent out an email today saying there needs to be an agreement with our European friends by the time of the European Council on October the 15th. If we can't agree that by then I do not see that there will be a free trade agreement between us, and we should both accept that and move on. Is he moving on, Therese?
Well, I think Johnson's ministers and cabinet officials have been briefing the conservative-friendly press for some time now that this is where he's at. They reportedly put that Downing Street considers the chance of success 30 to 40%. Now, I would normally say that's a sure sign he wants a deal, and that this is the government trying to move the EU a little bit more in the direction of the UK, and basically saying, we need some concessions. But let's think about these two issues that this rests on. One is fisheries, which is a very tiny portion of the UK economy, and you'd have to think that a deal would not collapse over fisheries, so it's politically important, particularly for Scotland. But the state aid issue is monumental. It's important for the EU because it speaks to their ability to prevent distortions of competition. It's hugely important to Boris Johnson because should he give in on that point, he will be accused by Brexiters of having compromised the very sovereignty that was hard-won through the Brexit vote in the December election and the withdrawal agreement itself. So he is looking for some movement from the EU side, and he's signaling that he's very comfortable with no deal if that doesn't happen. Now, whether he'd really, push that nuclear button, I think we have to wait and see. But you have to assume that that's a calculation they've made.
I can't believe I'm going to ask this question again because I've asked it so many times. Are the chances of a no-deal Brexit therefore now rising, and how high are they?
So if the government itself is putting it at 30 to 40% of a deal, I think my own, no more informed, certainly much less informed than government officials would be that we have a 60% chance of a deal, simply because a no-deal scenario would be ruinous for the UK's own union. Scotland's growing appetite for independence would likely be fueled by it. There will be certain economic consequences. Now, they might pale in comparison to the effects of COVID, but we saw with the exam debacle that it's not about the aggregate effects. It's about the powerful individual stories that get televised, get written about in the papers, and that have an impact on public opinion. So we've seen the government and Boris Johnson himself attacked by the opposition as incompetent. Should there be a no-deal exit in which we see, many stories of businesses, of traders, of people struggling because of the lack of a deal, you have to believe that those are going to cut through in a way that, even an 80-seat majority in Parliament is not, going to leave him ironclad. So for that reason, Guy, I still would bet that a deal happens somehow, but the government itself is saying that the chances are less than 50%. And yes, we keep asking that question, and I'm not sure we're any closer to answering it. But Johnson's now put an October 15th deadline on it, and I think he believes that that is the only way the EU actually moves to some kind of conclusion.
Just to kind of, the timing I think is quite interesting though. October the 15th, we're starting to get to the point where government support is rolling off, unemployment could start rising, kids would have been back for a while, so the lag on the COVID cases could also be starting to come through at that point. It strikes me that mid-October is a kind of very risky point to start bringing in extra elements of bad news.
That's absolutely true. At the same time, it's hard to imagine him having set a deadline that's earlier than that, simply because there is just far too much ground still to cover in these negotiations. As it is, if they were to do a deal, we know that it would be a very, bare bones deal that would, hardly in material terms be much better than no deal at all. So he couldn't really do it earlier. And any later is also difficult because the deal has to be ratified by the European Parliament. It needs to go through all of those channels. So he sort of picked this midway point at the European Council meeting, and, whether that's a sort of magical date or not, that just seems to be the calculation of what's the latest possible moment they could leave it, and yet what sort of date puts pressure on the EU to try to accelerate negotiations. We're now in round 8. They're not expecting much to be accomplished this week, but he's just put a deadline on the clock, and I think that will have an impact.
We'll see. Therese, thank you very much indeed, as ever, for your thoughts. Bloomberg Opinion columnist Therese Raphael. Let's bring another voice into the conversation. Chris Watling, Longview Economics CEO and Chief Market Strategist, joining us now. What do you make of the latest politics, Chris, and what do you think it means for UK assets?
I just think it's a classic sort of EU negotiation, isn't it? It always goes right down to the wire. It's a last-minute thing, and you end up, last minute, right at the negotiating table, finally, hopefully agreeing. I think what Boris Johnson's done is another marker of the seriousness of his intent to either leave or get a deal, rather than sort of keep this thing going forwards as Theresa May did many times. So I think it's just classic European politics, personally. I wouldn't read too much into it.
The UK assets look cheap. Certainly, many argue that the FTSE and UK equities look cheap. The pound has given back some of its recent gains today. Kind of where would you put them in terms of your investment thinking? Is there a potential for catch-up of UK assets?
I think there's two good things going for UK assets. One is in the long term, they're clearly cheap. So they're cheap at the moment on a relative basis. If you look at UK equities, for example, relative to US equities, it's about as cheap as it's ever been on a relative PE ratio in the last 3 or 4 decades. And the UK currency is pretty cheap. I mean, it was cheap, gets down to low 120s, but we're not that far away from a very serious support level that's held pretty well throughout these Brexit negotiations. So the currency is pretty cheap, you know, maybe a few percent above where you want it to be. The equity market's cheap on a relative basis. And the other thing I'd say is really at some stage in the next few years, if you're a long-term investor, difficult to time this in the short term, but if you're a long-term investor, we're going to get the switch out of growth into value. And that is going to favor markets like the UK over markets like the US. So there's a number of things brewing to suggest a UK long-term trade is absolutely there on the long side. It's just a question of timing. And the other thing to say is we all know about Brexit. There's nothing remotely new about it. It might be no deal. That's clearly a negative, but I wouldn't overemphasize how negative that is relative to what we already know. So I think that's a minor irritant on a 5-year view. And you know, the good news is you have a government in power that's got a reasonable majority, and you will have concluded all that uncertainty, and people can get on. They know what they have to deal with. So as you know, markets and companies like a bit of certainty. So yeah, so I think they look good. It's just the timing, the entry point is the challenge.
Okay, you talked about the switch from growth to value. What did you make of the price action late last week in the momentum trade that has been US tech, US growth?
Yeah, I mean, fascinating and fascinating to observe, as you say, that most of the weakness was really concentrated in the frothiest parts of the market, in the US tech and those sort of concept names, whether it's Zoom or the like, or Tesla or whatever. And actually tech in Asia didn't really get hit. I mean, I know overnight it did to a degree in China, but not in Korea or Taiwan so much over the last few trading sessions. So outside of the frothy parts, I didn't think it was too bad. I just think it's a little bit of short-term froth coming out of that market. If you looked at how overextended the Nasdaq is relative to its long-term trend line, it says the most overextended it's been since 99-2000. So no great surprises there. Whether or not the tech trade is over, I'm not so sure, because liquidity is still plentiful. And you mentioned Bitcoin, and I think that's a good liquidity indicator. So yes, off for the last few days, telling you a bit of tightening near term. But, you know, the Fed's still doing its thing. The ECB's doing its thing. Central banks around the world are still expanding their balance sheets. And really, the Nasdaq is a liquidity play. So is the growth stocks. So I don't know. I wouldn't jump on it today or tomorrow, but I suspect it'll be a good time to get going on that once again in the next few weeks.
Chris, we'll carry on the conversations. We'll talk more about central banks, the ECB meeting Thursday. Chris Watling, Longview Economics CEO and Chief Market Strategist, staying with us. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
We still got 1.8 million, with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Live from London, I'm Guy Johnson. This is the European Close on Bloomberg Markets. The US economy added 1.4 million jobs in August, and the unemployment rate fell much more than expected, down to 8.4%. But there's still a lot of work to be done to get the economy back to where it was, of course, pre-pandemic. Congress expected to resume negotiations for another stimulus package when it returns to Washington this week. Still with us, Chris Watling, Longview Economics CEO and Chief Market Strategist. Chris, it was a pretty positive jobs number. The news in some ways overtaken by the sell-off that we saw in the tech space. But does it make the case for more stimulus? Does it make the case for a lot of stimulus or a little stimulus?
Well, I mean, I think you could make the case that you probably don't need tons of stimulus, but you probably need a bit. But I suspect that's not the way Congress will see it, because they want to get re-elected, and they're going to look at the unemployment rate that, yes, it did fall, but it's still considerably above where you would consider full employment. So coming up to the election in November, it's certainly in both sides' interest to do more stimulus. It's a question of whether or not they can agree which bits and pieces they want to do. And I think you can make an economic argument that you should do more. So, yeah, we'll see. I mean, the reality is they've done an awful lot already. There's no doubt about it. And we can see that in the way the data is playing out. And I guess the unemployment fall in employment rate was one example of that.
Do risk assets respond positively to a little stimulus or positively to a lot of stimulus? And is the kind of the yin to the yang of more fiscal stimulus, more or less monetary stimulus? Because as you've said, the NASDAQ is a liquidity rally right now. I'm trying to gauge where that liquidity comes from and how much more there is still to come.
Well, the reality is the liquidity primarily, I mean, most liquidity ultimately is sourced. It either comes from the central bank or it comes from the commercial banks. And those are the two agents in an economy that can create money. And the commercial banks aren't really doing it so much at the moment because they're slightly risk averse and, you know, credit conditions are tightening and so on. And the central banks are doing a lot of the heavy lifting. But if you listen to Jerome Powell last Friday or on any occasion really in the last few months, he's been pretty clear. They're going to keep stimulating as much as they can for as long as they can. And whilst unemployment's high, that's their main focus. They're not worried about asset prices. They're not worried about the size of their own balance sheet. They're just worried about getting unemployment down whilst inflation seems to them pretty benign. So, you know, I think the liquidity is going to keep on coming. I think that's the key point here. And the fiscal stimulus will just support it. So, well, I mean, clearly what we're really doing is what I call backdoor helicopter money. You know, the government's giving and the central banks are giving. And to be fair to the Ray Dalios of this world who look at the debt super cycle, I think this is a classic third phase of monetary policy in a debt super cycle. You know, you've done QE for the last 10 years in financial assets. Before that, you cut rates down to zero. And now we're coordinating monetary and fiscal policy effectively, albeit not officially. So, you know, the size of the fiscal package, I don't think it really matters to the market in the sense that it might have some implications on encouraging cyclicals, but I suspect that'll be more about the vaccine timing. I think, you know, the liquidity is going to keep on coming, whatever size that fiscal package is. So that's the key, I think, here.
I think Dalio speaks later on this week, so we'll hear more from him. What about the ECB? What are we going to learn from Christine Lagarde this week? What are you expecting? At the moment, it looks like they're sitting back and waiting to see what happens. A, do you think they're really worried about the currency at 120? And B, when do you think we get more from the central bank?
Yeah, I mean, great question. I think really they're worried about the currency strength. They must be. It's been quite a strong move and, you know, it could easily keep going, albeit, you know, we're due a pause for a bit. So I think what I'm looking for is whether, I don't think they're going to change anything at this meeting, but whether they're going to start talking about the currency, start talking about that strength and start talking about it as a concern. Because, you know, you look at their headline inflation, it's remarkably low. I mean, we're down at sort of not far off zero, basically, on some inflation measures. So clearly they've got to act and they've got to do more. What can they do is the question, and what will they start talking about, and how dovish will she seem in that meeting? And I believe she's got a speech that evening as well, and there's quite a few ECB guys hitting the stumps after the ECB meeting. So I think we'll know a lot more about the ECB's thoughts and thinking by the end of this week from that policy meeting, but also from those speeches as well.
Have a great week, Chris. Thanks for your time today. Very much appreciated. Chris Watling joining us from Longview. Coming up, we're going to count you down to the European close. Very positive day for European equities today. And then we'll follow that up with a conversation with James Bevan from CCLA Investment. He's the Chief Investment Officer. This is Bloomberg.
Uninterrupted service is peace of mind. Kinney from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Live from London, I'm Guy Johnson. This is the European Close on Bloomberg Markets. So the German Chancellor Angela Merkel rethinking her sustained support for the Russian-led Nord Stream 2 gas pipeline. This is a potential response to the poisoning of the Russian opposition figure Alexei Navalny. Earlier, it was reported that the German clinic that is treating Navalny in Berlin ended his medically induced coma as he showed signs of improvement. Joining us now for more on this story, Bloomberg's Gregory White. Greg, Germany normally has a very mercantile approach to foreign policy, but what we are now starting to see, it seems, is a increasingly frustrated Angela Merkel. Do you think Nord Stream 2 is on the block here?
It certainly looks like it. Merkel, for the first time, through her spokesman today, came out and said that can't rule out the possibility that Nord Stream 2 might be stopped to punish Russia if Russia doesn't cooperate in the Navalny investigation. So certainly that's joining the tougher calls from her coalition on that front.
How would that work? What would they do? Would they stop production? Because that would certainly please the White House. Would they not use it? That would seem a strange response. How exactly will this happen?
It's not really clear at this stage because the pipeline is nearly built. It costs the total cost is about 9.5 billion euros. So it's an enormous project, and it's almost all the way to Germany by this stage. It's been suspended over through the latest round of U.S. sanctions against it. But the organizers have been saying that they're still going to finish it by next year. So the German government could simply cut it off with regulatory pressure, or stop backing it and stop using it, or and not use it once it comes into if it were to come into service. So. But exactly what happens there is it's unclear so far. It's just the government hasn't specified how they might actually do this. It's just been a political statement that would have to be something they'd have to consider now.
As I say, Merkel increasingly frustrated with Putin. what are relations between the two like right now?
Very frosty at this stage. It's been Merkel and had tried for many years to be sort of a bridge between Europe and Putin, and use her East German upbringing and her fluent Russian and other contexts to sort of help connect with the Russian leader. But it's been very difficult, and in the last few years, particularly recently with the attack last year on a Russian in Berlin Park, a murder that has been blamed on Russian secret services and things. The tensions the frustration level is really quite high, and this Navalny case seems to be the straw that broke the camel's back, it looks like.
Are there other implications? German business, what is its view of the situation? German business often looks east for new business opportunities. As I say, Germany normally pursues a very sort of mercantile approach to its foreign relations. Is there a sort of economic cost to be borne here, potentially?
But certainly could be. I mean, cutting off Nord Stream 2 would be a substantial shift in Germany's energy policy, a real turn, and I think a real signal of the depth of the freeze in relations. And that would certainly make it harder for all kinds of other economic projects and things like that. I don't think we've seen other signs of sanctions yet or anything of that sort. But certainly, if you've got the chancellor coming out saying, big high-profile projects like this are no longer the kind of thing we want to be doing, I think if you're a German business, you'd have to be thinking twice about big investments in Russia.
Is there European support for this? Would there be support coming through? I'm assuming there would, from the United States. Would this be a united approach to Russia? It's interesting, in the last few minutes, the UK's Foreign Secretary, Dominic Raab, has summoned Russia's ambassador over the Navalny poisoning. How coordinated would this be?
Yeah, the Nord Stream decision would be one that's up to Germany, but clearly the Germans have tried to marshal support from Europeans, and Merkel has been quite clear from the beginning that it has to be a coordinated European response. So exactly what they'll do, whether it's in addition to that or that sort of thing, we don't know yet. The U.S. obviously is a wild card because Trump has commented on it, but reluctantly, and certainly doesn't seem to have much appetite for punishing Putin. But on the other hand, Nord Stream 2 has been a project that the U.S. administration has long targeted as something it wants to stop.
We'll leave it there. Gregory White, thank you very much indeed for the update. Quick look at European equities as we head into the close. Our performance coming through from the FTSE 100. That's largely down to the currency, which is significantly weaker today. The DAX and the CAC are on, though, up nicely on light volume. We'll see what happens with US cash tomorrow. At the moment, the indications are that we could see a fairly weak open for US tech. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen
And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging. We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Seconds to go until the end of regular trading here in Europe. Clearly light volume with the US out for Labor Day, but a very positive session, as you can see, with the Stock 600 tracking up towards session highs. Just about every single sector in positive territory. The currency market's also having a fairly significant impact on today's session. We have seen weakness in the pound, which has provided reason for the FTSE to outperform. So the FTSE's up over 2% at the moment, whereas other European markets still up very strongly, around 2%. But we are getting some outperformance coming through from the FTSE 100, but that's very much a mechanical process in terms of what is happening. So the pound getting hits, this as we see Boris Johnson talking more and more about the idea that a hard Brexit could be in the offing. As you can see, the cable rate now 131.64, though the bulk of our guests say long term, actually still they are largely positive on what the trajectory is for the sterling rate. We're down by around 0.9%. But you've just basically got a mechanical process where you're translating the revenue stream, particularly of the large multinationals that exist within the FTSE 100. So let's see what the effect that that's having in terms of the main markets around Europe. As I say, largely positive, pretty much every sector in positive territory. The FTSE 100 up by 2.31%. The DAX and the CAC Caron just shy of 2%. The DAX up by 1.88%. The auto sector has been having a very strong day. I think Angela Merkel meeting with leaders from the auto sector over in Germany tomorrow evening. It's going to be interesting as well, of course, to see what happens with Tesla tomorrow, but I'm not sure it is really graded as an auto stock. The CAC Caron's up by 1.7%. As I say, we are seeing a very strong sector performance today, albeit, as I say, also on light volume. But the auto sector is leading the charge today. So the car sector up, the healthcare sector up, the utilities up as well. So in some ways, you can argue that you do still have a defensive bias attached to this market. Interesting to see oil and gas trading higher as well today. The Saudi pricing of its latest batch of crude sales indicating some downward potential within the crude market, but it's not that substantial. But as I say, every single sector is in positive territory. In terms of the stocks that we're watching, Ryanair, one that certainly is worth paying attention to. Ryanair down by 2.2% today. I think we've seen a downgrade in terms of the ratings. We've also seen a call today with Neil Sorohan talking about the fact that the company is looking to tap the primary credit market, maybe with a 5-year, looking to raise money on top of the money that it raised last week in terms of the stock sale. AstraZeneca weakening down a little bit, down by over 1%. This continuing focus on what's happening with vaccines. And as I say, the auto sector really charging ahead in Germany, trading up quite nicely. Volkswagen's had a very solid session as well. We're up by 3.4% on Daimler. And as I say as well, it looks like Angela Merkel's going to be meeting with the auto sector leadership tomorrow. Pay attention, you could see some headlines coming out of that. Let's talk more about what is happening with these markets, the spread between what is happening between Europe and the United States. Do you still want to be long the United States? What do you make of the price action that we saw Thursday, Friday last week? Let's try and answer some of those questions with James Bevan from CCLA Investment. He's the Chief Investment Officer. James, let's talk first about what is happening in the tech sector. The momentum trade has been on and on and on. Are we starting to see the first stages of it being turned off?
I think that we should expect gyrations around a theme that is likely to persist. I see nothing in terms of the lead numbers that suggest to me that tech remains anything other than a sector we should continue to support. But equally, I do think we should now have a much more balanced approach to investment management and portfolio construction. So looking to downgrade the importance of technology, introducing both cyclicality, but also utilities exposure to ensure that portfolios are resilient and well placed for what likely lies ahead.
Why do you want to do that now?
I would say for three reasons. First off, in terms of overall aggregate valuation, the room for maneuver in terms of positioning against the risk of rising inflation is now quite modest. And I would suggest that tech, as one of the archetypal long duration assets, has the most to lose. Markets become fearful about inflation, begin to want to price long duration assets more cheaply. That obviously has a flip side in terms of why one might favor entities such as utilities and infrastructure asset plays that are linked to forward inflation. For me, inflation is not a 12-month story, but it's certainly a 24-month story. And that takes into a particular account what is happening to US liquidity flows. Now, we all know that the Federal Reserve and the other central banks have added enormously to their balance sheets. I reckon that the combined balance sheets of the Bank of Japan, the Federal Reserve, and the ECB are now north of $20 trillion, having added $6 trillion in this year to date alone. And a lot of that cash was expected to remain within the US. Actually, when I follow the cash, a lot's gone to Asia. I think that they will, in the main, see balance of payments premium beginning to re-emerge, and therefore eventually exporting inflation rather than deflation. Now, I think that's a 24-month story. The markets inevitably look ahead and want to discount the future. That's why I think people should be looking now to consider assets that are more linked to inflation. As to cyclicals, I think the lead indicators are clearly pointing to the risk of a genuine V-shaped recovery. That's why, therefore, we should be considering cyclical assets now, which have been left behind.
If we get a vaccine, if we get a successful vaccine, is that the moment to make that shift? And how big a shift would we get on such news?
Well, I would say that at the moment, whether we get a vaccine or not, we are still due a relatively muted economic growth outlook. We still have excess capacity in the global economy, not least because a huge amount of the cash has been provided by central banks and governments has allowed so-called zombie companies to persist. That supports excess production, pulls down prices and profitability, and inevitably constrains overall growth. And against that backdrop, I think it is way too early to say that we are out of a pro-growth environment. But I do think that a vaccine would call for a more balanced approach to portfolios, certainly in favour of equities, and absolutely being extremely cautious of the bond market, where already nominal yields are well below rates of inflation.
What did you make of Germany's IP data today? 1.2 versus a 4.5 estimate and an 8.9 previous. You talk about the V-shaped recovery. A lot of the industrial sector has come back quite strongly. Are we starting to see that momentum fade?
I think that we would always have expected that momentum to fade. And the real issue is what happens through the fourth quarter and beyond. And a big chunk of the German story must relate to how much more export business can they have. And a lot of people had pointed to the better news coming out of China. But China's success was much more about its export numbers rather than its import numbers, which have been really very low indeed. And therefore, no surprise, Germany was not a beneficiary of the Chinese revival.
So what does that tell us about where we are in the process? Have the easy gains been made, both economically and from an investment perspective?
Oh, absolutely. We've seen easy gains both for markets and economies. The real issue now is what can be self-sustained. The other big issue, of course, relates to politics, the rise of so-called modern monetary theory, where central banks work with governments, really speaks to me of the premise that we shall now go back to days of big government rather than small government. In the wake of the global financial crisis, after all, governments wanted to be smaller. They embraced austerity. They wanted to shrink debt. Governments today are wanting to spend money. The big question for me is, when the COVID-19 crisis is deemed to be over, will we go back to small government or will we stay with big government? And I would suggest, reading the tea leaves right now, that we are likely to have big government, particularly in the United States, irrespective of whether it's Mr. Trump or Mr. Biden in the White House.
We'll talk more about the US election in a moment. James Bevan of CCLA Investment Management. Please stay with us. Bit of breaking news. AB InBev, according to the Financial Times, launching a search to replace its CEO, Carlos Brito. That news coming out from the FT after the market closed. The stock finishing in positive territory, up by around 0.3% over in Brussels. Let's check in now on the Bloomberg First Word News. Talking of US politics, Joe Biden holds a 10-point lead over President Trump. That's according to a new poll from CBS News. The poll also found that 4 out of 10 Democrats say that Biden isn't campaigning enough. The top issue for voters is still the economy. That's followed by healthcare, the coronavirus outbreak, and the recent protests. Authorities in Southern California have pinpointed the cause of a fire that has burned more than 7,000 acres. They say it was started by a pyrotechnic device used at a gender reveal party. The blaze is one of 23 major fires burning in the state. And India has become the world's new coronavirus epicenter, and it has surpassed Brazil as the second worst hit country. India reported more than 90,000 cases for the second day in a row. Unlike the US and Brazil, India's case growth is still accelerating. Okay, quick look at where European stocks have settled through the auction process. These are the final numbers to be posted. A very positive session for the FTSE 100. Slightly sort of amped up by the fact that we saw the pound under pressure today, a mechanical relationship between the two as you translate revenue streams. So the FTSE up by 2.4%, the DAX up by over 2%, driven by the car sector, to excuse the pun, and the CAC 40 up by 1.9%. Sorry, 1.8%, I can't read. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back. Live from London, I'm Guy Johnson. This is the European Close on Bloomberg Markets. Still with us, James Bevan from CCLA. James, we talked about the kind of top-down approach you're taking. Talk to me about the bottom-up. What kind of stocks are you looking for? And give us some names.
Well, first of all, I absolutely maintain a pro-growth stance and therefore have significant weightings in the usual names such as Amazon and Alphabet, where I can see significant free cash flow. In contrast, I'm not brave enough to back Nvidia and Tesla, where I'm not confident that we are going to see the growth come through to justify the share price. In terms then of cyclicals, I think this is the right moment in the European context to be looking at names such as Barclay Group, UK housing company, Smurfit Kappa, and Lafarge Holcim. These are companies which I regard as structurally too cheap in the context of the probability of reviving economic growth within the region. As for utilities, I would say that sustainable energy is very much to the fore. Next year, for example, the US utilities company, I think, is remarkably well placed to capitalize on the growing requirement for clean energy. Whether Mr. Biden takes the helm clearly would be enormous support for that case, or if simply we normalize a US economic growth and that global prices drive the next year's focus and benefit.
Lafarge Holcim, let's talk about that. Is that a bet on a increased level of infrastructure spending? Is that a bet on sort of governments having to put money to work in a slightly Keynesian way? Because some would argue that if you look at Europe and the way that it's trying to do business at the moment, it's trying to avoid companies with big carbon footprints, and cement companies have quite big carbon footprints.
Guy, you are absolutely correct. There is a difficult standoff between the appetite and requirement to revive the European economy and the expectation that clean energy is deeply important. And I would suspect that in terms of that balancing act, politicians will recognize that there has to be new build in order to be able to have the full shift towards clean energy. And cement is going to be critically important in building that infrastructure. And you talk about Keynesian economics. I think that we are in a post-Keynesian world where increased government expenditure will become the norm rather than simply part of a cycle. So I suspect that once the Europeans have got used to the idea of more government spending, so they will recognize that government should and will be a larger share of economic activity than Keynes ever anticipated would be the case.
Well, let's talk about the infrastructure spending. There is, we talked about this a moment ago. There is this kind of debate about how you increase inflation. Central banks clearly have been throwing a lot of money at the wall. Some of it has stuck, some of it hasn't. And what it has certainly done is driven up asset prices, both post the Great Financial Crisis and post the COVID crisis, though we're still obviously in the latter. How do you generate real inflation? And is it via significant increases in infrastructure spending? Is that the way that we can, A, probably improve productivity, but B, generate some kind of inflation? And is that something that investors need to position for as well? You talked about it being a sort of 24-month case. Post the sort of 24 months, how long does it last for?
Well, that's not my analysis of where inflation is coming from or not coming from. When I lift the lid in terms of developed market inflation, I would observe a bifurcation between relatively strong domestic service sector inflation, which is essentially in the non-traded areas and shows up in areas such as relatively strong house price inflation, and then global traded goods and service deflation. And that, to me, is very much the product of globalization and the North Asian command economies willingly exporting deflation in order to grow market share, in order to drive people into industry and therefore protect jobs. And when I think about the current sources of low inflation, I would therefore identify demographic change with aging populations, necessarily disinflationary, if not outright deflationary, disruptive technologies that have a lot further to run, many of which, interestingly, make no money for their shareholders, high levels of embedded indebtedness, which is still very much here to stay, and then globalization. And I think globalization is under threat, both for political reasons and also because of the aftermath of COVID-19.
But isn't that inflationary? We've got a big summit coming up between Europe and China. I think it's later this month. And that summit is likely to show a breakdown in relations between Europe and China. We're also seeing a breakdown in relations between America and China. Globalization is on the back foot. Surely that has to be inflationary.
I do believe, therefore, that in due course inflation rises. I completely concur with that perspective. But interestingly, I think that government will hold down bond yields, as occurred in the United States between 1942 and 1951. That was a period, very deliberate policy to reduce the overall scale of US debt by allowing inflation to run well ahead of bond yields as bond yields were controlled. I think we'll see the same again. Central banks acting to hold rates down, allowing inflation to rise progressively, eating away at the real cost of debt, rebooking, therefore, the capital market system at the expense of bondholders.
So if I have a 60-40 portfolio, am I going to lose money on my 40, sorry? Am I only going to make money on my 60? And is that the right way now to approach investment?
I think that the 40% that is allocated to the bond markets will lose money in nominal terms and very substantially in real terms as inflation accelerates. So I would be building a portfolio that was far more focused on real assets, with equities, with infrastructure and utilities, providing inflation linking. I would avoid Treasury inflation protected securities where real yields are already negative and, in my perspective, likely to get even worse. So against that backdrop, I think I would recalibrate or redefine what is meant by risk. Very low bond yields are hugely risky for investors in terms of risk capital, and most certainly risky as risk can be in terms of the preservation of real value.
Going to leave it there. Useful stuff, James. Thanks for your time today. Very much appreciated. James Bevan of CCLA Investments. What have we got coming up for you? We're going to hear from Zoom CFO Kelly Steckelberg about the company's surge in demands during this pandemic. This is Bloomberg.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From London, I'm Guy Johnson. This is the European Close on Bloomberg Markets. So, Zoom video shares spiked higher last week after crushing Wall Street's estimates for the quarter. The company crushed the estimates. The company also provided guidance well above analyst estimates. We spoke to the company's CFO, Kelly Steckelberg, about the surge in demand seen during the pandemic.
We have been hiring as quickly as we can. We added 500 new employees in Q2. That was a record number of hires for us ever in a quarter. And also we have some amazing partners in terms of meeting the capacity that we needed to support this increased demand. We have been leveraging the public cloud through providers like AWS and Oracle, which have been great. And I think it also just speaks to the reliability of our platform itself. It's been able to stretch to these increased demands.
How much more can you ring in the video conference space? How do you grow in that quickly? And who do you think are your main competitors for that?
So the great thing about Zoom, and what I think that especially our enterprise customers see, is that it's a consolidated platform of a suite of products. So we have our core meetings platform, which is the way that most people get introduced to Zoom, but we also have a whole suite. We have our webinars product, which we've seen tremendous growth in over the last few quarters. We have Zoom Phone, which we launched last year, which is our cloud PBX solution. And we also have Zoom Rooms, which is our conference room solution. So we have this great opportunity for customers to come to us and get this integrated suite of products. And we're excited about the momentum we're seeing across all aspects. Zoom Phone, for example, is now available in 40 countries around the globe. We had our largest deal to date there in Q2. And just a fun fact, our 2 largest deals there were outside the US, so seeing tremendous traction internationally. And then on the meeting side, we had an amazing deal with ExxonMobil, which was our largest initial deal to date as well. So really excited about the traction we're seeing, not only across all segments of our business, but all of our product lines and internationally and geographically as well.
Kelly, let's talk big picture. You're rebalancing your engineering team away from China. To what extent did what is happening with TikTok influence your thinking there?
So first, I just want to highlight that Zoom and TikTok are not similarly situated as it relates to China, in that we are an American company that was founded and is based in the U.S. I would say that what we are doing is looking for an opportunity to augment our existing engineering team in China. We have our leadership team for engineering in San Jose. It's always been there, and we're looking to further diversify the talent of that amazing team by adding resources not only in the U.S., but also in India. And that will also help us ensure that we have a follow-the-sun approach to continue to support the growing needs of our customers around the globe.
So is that a fancy CFO way of saying, yeah, that you're going to reduce your employees in China because of the ties?
We have absolutely no plans at this point to reduce our engineering talent in China. We really are adding to it. If you look at our financial results for Q2, you'll see that R&D as a percentage of revenue was 4%. And we really want it to be higher than that. We want to continue to invest in R&D resources around the globe to ensure that we're able to drive the innovation that is needed for our platform. So we want that number to be much higher than 4%. It was due to that, it dropped to that level due to the steep increase in revenue. And as we saw, all of the functional areas decline as a percentage of revenue. So we really want to continue to add more engineers around the world to continue investing in our platform.
Kelly Zuckerberg, the Zoom video CFO, talking to Alex and me last week. US futures flat going into tomorrow. Hope you've enjoyed the show. This is Bloomberg.
Nós aqui do Brasil, eles querem proibir nós na mineração, produzir a mineração, né? E vem as empresas, grande empresa que nós aqui do Brasil, não tem condição de trabalhar nela, eles pegam, tiram o minério e levam quando eles querem. E nós no Brasil aqui, que mora aqui no Brasil, nascemos no Brasil, e fica sem a nossa produção.
Sou pai de família, né? Eu tenho filhos estudando. E eu não posso me acovardar ao ponto, né, de deixar a minha filha passando necessidade ou a minha esposa passando necessidade. Então a gente se precaver, vai fazer o quê? A gente vai esconder, a gente vai correr deles, né, enquanto tiver perna. Agora desistir nunca, a gente vai continuar trabalhando, porque eu preciso sobreviver, eu preciso dar o sustento para minha família.
It does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Novartis Chief Executive Vasant Narasimhan says that leadership is about empowering others to be their best. Born in Pittsburgh in 1976 to parents who had emigrated to the U.S. from India, Vas is one of the world's youngest leaders of a major global company. With a workforce of over 100,000, Novartis products reach over 800 million people worldwide. After getting his doctorate in medicine from Harvard in 2003, Vas says he thought of practicing medicine, but instead joined the World Health Organization to work on malaria and HIV treatment programs in Africa. He then went on to spend 2 years at management consultancy McKinsey before his meteoric rise through the ranks at Novartis. As the entire world's eyes are on the pharma sector to develop a cure for COVID-19, Vas says we will only eradicate the virus when we have effective leadership and collaboration between the public and private sector. COVID has also reshaped plans for this show. We originally spoke to Vas in February, before social distancing became commonplace. In mid-August, I spoke to him again. Today, on Leaders with Laqua, Vas Narasimhan, the Chief Executive of Novartis. Vas, you worked for the WHO, you were a consultant, and now you lead Novartis. How has it shaped the leader you've become in dealing with this pandemic?
I think my leadership journey has been one that's all about a range of different experiences. I started out as a physician, public health physician, working in developing countries, seeing outbreaks like HIV/AIDS, working on malaria, working, as you said, with the WHO. Later worked primarily in drug and vaccine development, so really developing some of the therapeutics and vaccine technologies that we're so interested in today, and then ultimately now in this role as a CEO. What I find to be incredibly valuable in a situation like this is having that breadth of experience, everything from on-the-ground public health experience, science-based innovation, leading large organizations, and actually seeing through various challenges, whether that was the early days of the HIV/AIDS, which was a major pandemic, to the H1N1 pandemic. Having seen some of these situations and how they've evolved, I think has given me hopefully some perspective to help lead Novartis through this period.
You gave an interview in August 2019 where you said we are not at all prepared for a pandemic. You were thinking about a pandemic. Why were politicians and governments not?
I think there's an immediacy problem for public policymakers. You tend to think about what are the things that are going to impact your country or your communities in the next few years. After we have had multiple pandemics over the last 50 years, but most notably after the 2009 H1N1 pandemic, there was a flurry of interest in trying to build up real capacity in the system, manufacturing capacity, R&D capacity. International organizations like CEPI for vaccines were built up. But then what I observed is as the years passed and we moved further and further away from that swine flu pandemic, interest waned, funding moved away. We at Novartis ultimately sold the factories that we had built up for vaccine production, ultimately moved out of the vaccines business. So I remember in that interview reflecting back, I realized that many of the things we know you need for a pandemic, warm preparedness, technology, readiness, strong surveillance, had sort of withered away because we had lost our memories. And I think what we need to do is build much longer term memories. It's difficult to mount these kinds of global responses in very short periods of time.
Do you think this pandemic will be different simply because of the scale of the lockdown and the scariness of this pandemic?
I think this will be different for a few reasons, Francine. I think one, the impact on global economies and the fact that the impact was felt so broadly around the world will leave lasting memories, hopefully for populations and policymakers to think through how do we ensure that we're ready in the future. But I also think from a collaboration standpoint, the kind of collaborative structures that were built up in our sector have never been seen before. And then the explosion in science and technology, something I've never seen, in that ability to mount such a scientific response, I think will hopefully lead to more lasting change. The real test will be 3-4 years from now when we look back, can we objectively say if this were to happen again, we would be able to mount a much more rapid and effective response that wouldn't cost the world hundreds of thousands or millions of lives.
Up next, what does it take to eradicate COVID?
We will likely have a vaccine that is viable sometime before let's call it mid of next year. Could be as fast as end of this year.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
world's hopes of getting life back to normal are pinned on a vaccine. Immunizing the population would break the virus's ability to spread. Some of these treatments have shown promise in early tests, leading governments to spend billions of dollars securing doses in the event a candidate proves effective. But public health officials are concerned that displays of vaccine nationalism may prolong the pandemic. Our guest, Vas Narasimhan, believes that in order to end with COVID-19, the pharma industry and national governments will need to show a stronger leadership than they have so far. He says that a cure will only work if it's viable and is made accessible to all. Before the pandemic, the chief executive of Novartis told me that the pharma industry was in dire need of strong leadership.
We lost our way. Now, I think we can get it back. I think it's going to take time and effort. We're going to have to be consistent in how we approach access to medicines. Our margin for error is very small.
Is this pandemic the chance for drug makers to redeem themselves? We're still with Vas Narasimhan. How fast do you think we'll have a working vaccine that is actually safe and usable?
Yeah, I see this as shades of gray as you look at the vaccine. We will likely have a vaccine that is viable sometime before the, let's call it mid of next year. Could be as fast as end of this year. But I expect that vaccine may not have the optimal efficacy, may not have the full safety data, won't be fully characterized, and won't have large-scale manufacturing capacity. What I believe is with 70 vaccines in development by the end of next year, we'll be able to solve many of those constraints and then actually have a vaccine that we're confident in, have safety, efficacy, large-scale manufacturing, and can be used in large populations. Now, what that means in practice is we're going to have to make some difficult calls in the coming months. What is efficacious enough? What is safe enough? And then with limited supplies, who will really need the vaccine most urgently in the near term? Those are complex discussions. Those are the discussions we're going to need to have with the public policy community in the coming months.
Is there a danger that we're developing a vaccine without fully understanding the virus? And so it's difficult to track. It's difficult to see how it mutates. It's difficult to know who to vaccinate first, given we don't exactly know why people fight it with T cells and others with antibodies.
We're certainly moving at breakneck speed with the vaccine development. So there are many open questions. It's worth noting that typically the experience has been to develop a novel vaccine takes about 10 years. And that takes that long because we typically want to deeply characterize the vaccine, understand in many different patient populations in phase 2 studies, then go to large-scale phase 3 studies, and then follow these patients for a year. In this instance, we're completely skipping phase 2 and going directly into large-scale phase 3 studies without understanding a lot about the biology of the virus. So I think given the scale of the pandemic, I understand why that's being done. But I think it's really important that we support global regulatory agencies to really have rigorous standards. The worst thing would be that we roll out a vaccine that too fast, we lose public trust for a future vaccine for COVID, and then perhaps even more importantly, we lose the broader public trust on vaccines in general, which has saved billions of lives over the last century.
But you helped develop the H1N1 vaccine, which only took 6 months. Is that because we had a different basis for that?
You know, when you go back in time, with influenza pandemics, we've built up so much know-how. We have manufacturing facilities, we have technologies we deeply understand. So in a sense, what we do with pandemic influenza is we have the architecture all set up and we change the cassette of the virus. And then we can know pretty well that we're going to generate a very strong protective immune response. In this instance, we're pretty much doing everything new. Platforms are new. The technology platforms we're using for the vaccine are new. The virus is new. The human population has never seen this kind of virus before, whereas with influenza, we have influenza every year. So there's a lot more complexity with this particular vaccine development. It's worth noting we didn't really succeed in developing a vaccine for the first SARS outbreak in 2000, or MERS, which happened a few years ago, and only partially with respect to Ebola. So we have to be humble with respect to figuring out, is a vaccine really safe or effective?
Are regulators working together? Who do you trust? Are there, do you trust the Russian vaccine, the Chinese vaccine, the American vaccine? How difficult is it to understand what regulators behind the scenes are actually doing?
You know, I've had the opportunity to lead the pharmaceutical industry's engagement with the U.S. Food and Drug Administration. There, I would say they're being extraordinarily rigorous. They have the right standards. They've set clear policies out. They want at least 50% efficacy. They want 6 months of safety data. They're holding the vaccines to the appropriate standards. And from what I understand, they're also collaborating with the European regulators to ensure similar standards are applied, though we don't know yet what exactly the European regulators will require. We are in a world at the moment, though, where I think given the severity of the pandemic, individual regulatory agencies may take a different approach. We see with the Russian agency that they took a different approach, requiring a lesser data standard than would typically be expected. I hope that regulators, US, Europe, and around the world hold vaccines to the high standard. And at the same time, we can accelerate therapies. I mean, we can do therapies for patients who get COVID, whether those are repurposed drugs or novel drugs, so we can manage this pandemic as best we can until we have a vaccine we can trust.
What are the challenges of immunizing the world, actually? Is it distribution? Is it who gets it first? Or is it just a challenge of pricing?
You know, I think, Francine, there's a wide range of challenges we're going to have to overcome. Right now, there's, of course, a big element of geopolitics, of kind of who wants to control vaccine supply, and you see a lot of bilateral agreements being signed. I saw this as well in H1N1. Not ideal for optimally distributing vaccines, but it's the reality of what we're in. So right now we have the geopolitics. We're going to have the challenge of scaling up manufacturing. We don't know which vaccine yet really works, but regardless, scaling up manufacturing to billions of doses, getting billions of vials and syringes, getting billions of manufacturing supply chains up and running to produce that amount of doses is going to be, of course, a challenge. And then the supply chain into countries. I learned in 2009, this is not as straightforward as it sounds. Whether it's ensuring there's what's called a cold chain to ensure the vaccine is maintained cold, whether or not there's the right equipment for the nurses, do we have the right approach to tracking who got the vaccine, who didn't get the vaccine? All of this is going to have to get sorted out in very short order if we do find a vaccine that works.
Up next, pharma after COVID.
I hope that coming out of COVID-19 we'll have a bigger appreciation that how important it is to invest in these kinds of next generation technologies.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
Advances in cell and gene therapies are beginning to yield powerful new treatments for some of the most devastating illnesses. But COVID-19 has thrown a spanner in the works. Before the pandemic, drug makers were more focused on targeting conditions and technologies that can set them apart from rivals. Our guest, Vas Narasimhan, told us gene therapy was going to be the future of pharma.
We went from a world where we had pills and small molecules, medicines, as we had for almost 100 years. We moved to these injectable drugs that also had an incredible impact. And now we're able to start editing the genome.
But needs must, and at present, all hands are on deck to find a cure that would mean the end of this current pandemic. What does leadership in pharma look like beyond the pandemic? Novartis Chief Executive Vas Narasimhan is still with us. How will medicine change in the next 5 to 10 years? I know we talked in the past about cell and genome therapy. Does that movement get accelerated because of the pandemic, or does it actually get pushed back?
At the moment, I'd say we're seeing a little bit of a slowdown, I think, in our pace of innovation, but I hope it will pick up again as the energy around new technologies really picks up. You know, when you look at it, we're entering an exciting phase independent of COVID-19, where we're seeing whole new modalities emerge. We operated in a world we primarily had pills, chemicals that we gave for patients for nearly 50, 70 years, from 1900 to 1970, 1980. Then we had the advent of what are called biologics, proteins we could give patients to treat their diseases. And then more recently, and our company has tried to take a leadership approach in this, we've had the emergence of gene therapies, cell therapies, radioligand therapies, RNA therapies, and the RNA technologies are playing an incredibly important role with COVID. These 4 new technologies will reshape medicine for the next decade. I hope that coming out of COVID-19, we'll have a bigger appreciation that how important it is to invest in these kinds of next generation technologies. And then while we see a slowdown initially, we'll see an acceleration in next year and the years to come.
So, Vas, how does that exactly work? Gene therapy is basically when you're, I guess, a child or younger, you're at risk at diabetes, and so you take a treatment that will avoid you having it in the future. Again, that's I guess a one-off, but it could be an expensive treatment. So how do you look at who pays for what and when, and what if you don't have the money for that?
It's interesting, Francine. What we're seeing right now with our first launches in this space, one in cell therapy, one in gene therapy. In gene therapy, what we do is we use a safe, attenuated, as we call it, virus to edit the genes or insert a gene into cells that are affected by a genetic condition in children, and we hope over time in adults, to give them a one-time therapy to give to a dramatic health benefit. And what we see with that is pretty amazing things. We see infants who would otherwise have died in the first year of life, meeting their normal milestones, going to preschool, the kind of things that bring really tears to your eyes when you see the progress. With our cell therapy is a similar story. We reprogram, take cells out of the body, immune cells, reprogram them, put them back into the body to kill cancer cells. And we see children who were otherwise about to die, maybe within 30 days, now reaching 8 years cancer-free. Now, initially, when we rolled these out as one-time therapies and tried to explain that we were avoiding a decade or decades of costly therapy with this one-time therapy, therefore we priced it in a way that provides value over time, there was a big shock to the system. And I learned a lot through that and how to better educate policymakers. But we sit here today, our cell therapy is reimbursed in over 20 countries. Zolgensma, our gene therapy, is rapidly being reimbursed around the world, already reimbursed in US, Japan, Germany, and multiple other markets. So what's been interesting is when you do the right education and explain the long-term value proposition, policymakers eventually come around.
I mean, our health is now anything, nobody talks about anything else, but frankly, our health. Does it change the social contract between, an individual and a country of what they're expecting in terms of health? And how does that change relationship with pharmaceutical companies?
I see a few shifts in the way I think individuals are seeing their role. One is there is now an expectation that public health organizations within a country have the ability to respond very quickly to a crisis like this, and that healthcare systems are able to respond as well. I also think we're seeing one of the great challenges is kind of, again, a moral dilemma, is an individual's behavior can have consequences to a broader population. We see that, we're going to see that in a few different dimensions. One, we see that, of course, with young people having asymptomatic coronavirus infections, but then potentially spreading it into at-risk populations. We're going to see the same with vaccines. We know with vaccines, if you get to about 60, 70% of populations vaccinated, you have something what's called the herd effect. The herd effect means while you don't get everybody vaccinated, if you get enough people vaccinated, the whole herd is protected. The entire group is protected. But if people don't want to get vaccinated enough, then we'll never get to that herd immunity. So I think there's that individual expectation, but also what is the individual's role in the overall public health context? Now, for our industry, a few shifts are happening. One, there's an increased interest in clinical trials and the role patients can play in clinical trials. That's a big shift, and I'm hopeful that will carry over. It's always striking to me when I look at the data, it is incredibly small, the percentage of patients who could participate in clinical trials who do participate in clinical trials. And the pace of medical innovation would accelerate dramatically if we could get more patients into clinical trials. And then the other element of the contract that we've already talked about is access to medicines. I think the expectation of society that it's not going to be enough that we get these great innovations, people need access to the innovation.
How do you see AI, artificial intelligence, developing in the medical world? And can they eventually, robots, replace physicians, or is there always need for the human mind?
We've made big investments at Novartis, and I've been looking very closely at the world of AI for a while now in healthcare. We say Novartis wants to be a company that reimagines medicine, leading medicines company powered by data science and digital technologies. AI has been interesting. One of the most important things with respect to AI is to identify where it can have a big impact, but also to understand where its limitations are. I think companies that have done this well understand quickly you need very good data that's well architected and clean. You need to understand the limits of algorithms. And if you understand those things, then you can deploy AI very quickly. We're seeing a few places where the use cases are really accelerating. One, in our discovery engine of finding new medicines, algorithms can help us solve the puzzle of how do you find a molecule that can unlock a lock in the human body to have the effect that we want to have, kind of these miracles of medicine. Algorithms can help us solve these really tough problems. We're trying to unlock billions of years of cellular evolution, and they really help us accelerate that. The second thing we're seeing is with AI that all of the imaging and medical data that we're collecting, AI can help us process that data much, much faster. I've not yet seen how it could help necessarily with COVID, but with anything where you take a scan of the eye, the scan of the body, AI is much better at reading those scans and finding patterns and help us better, better develop and hopefully better identify patients. And the third big area has been in the whole world of manufacturing, supply chain, and operations. We run our clinical trials now powered by AI algorithms. We run our manufacturing supply chain powered by AI algorithms. And if anything, COVID-19 has accelerated all of that. I would point out, though, there have been instances where we failed. I mean, we find that AI hasn't solved everything in a magic way, and that's an important thing to bear in mind as well.
Vas, I know you also started something called Unbossed, so you can do the hashtag Unbossed, which is basically what empowering people to speak up and challenge their boss. How has that been going during the pandemic? I mean, it's difficult because you don't see people face to face. Does it empower people to speak up, or has it actually been quite difficult having your workforce at home?
I think it's been one of the keys to our success. A few years ago, we said we wanted to create an inspired, curious, unbossed culture. And that links to really a deeper understanding what all the research shows of human motivation. Fundamentally, knowledge workers are motivated by a sense of purpose, a sense of personal improvement and curiosity, and a sense of feeling empowered that if you draw the lines on the tennis court, you let your team play. You don't micromanage, you remove obstacles. That's what we ask of our leaders. When we went to remote working, this all got put on hyperdrive. I mean, we had no choice but to empower our teams simply because everybody was remote and everybody was working through these technology platforms. So I think it enabled us to adapt very quickly. As I said, our trials, our manufacturing network, our digital platforms, our ability to reach customers, all worked seamlessly. If you had asked me the last time we met in January in Davos, if you moved 95,000 people at your company onto a completely digital remote working, will you see any disruption to your operations? I would have probably said, yes, we'll see a pretty significant disruption. And yet we didn't. We were actually able to pull it off. Huge learning for us. And I think the culture change really enabled that.
Vasant Narasimhan, thank you so much for joining us on Leaders with LACWA.
Thank you, Francie.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
When I was a kid, the disaster we worried about most was a nuclear war.
5 years before it happened, he predicted a major outbreak in a now widely shared TED Talk.
Today, the greatest risk of global catastrophe doesn't look like this. Instead, it looks like this.
He also said we wouldn't be ready for it. He was right. Bill Gates, the Microsoft co-founder and billionaire philanthropist, has become, for better and for worse, a central character in the COVID story. The good news? His foundation has pledged more than $350 million to fight the disease. The bad news? He's been vilified by anti-vaxxers and other conspiracy theorists who claim he seeded the virus for his own nefarious purposes. What does he think our chances are now of seeing through the wilder theories and of beating the disease, and when? Joining me on this edition of Bloomberg Studio 1.0, Microsoft co-founder and co-chair of the Bill and Melinda Gates Foundation, Bill Gates. You warned about a pandemic like this years before it happened, and your warnings are forever etched in my brain. Now that we are here, what do you see happening next?
Well, fortunately, the innovation in diagnostics, therapeutics, and vaccines will get us largely out of this by the end of 2021. The therapeutics will start to cut the death rate, but the true end comes when between natural infection and the vaccine, we have this herd immunity. And for rich countries, sometime next year, ideally in the first half.
So we're going to be okay? Is that what you're saying?
Well, we're certainly going to be okay. We're lucky this one wasn't a more fatal disease. I do think this time we'll pay attention and, have the same type of practice and preparation. Some countries, did very, very well. The U.S. Did not.
So your foundation has given more than $350 million now to fight COVID. You are backing a South Korean vaccine in particular. Why that vaccine? And are there any other vaccines out there that look promising to you?
We're behind a lot of different vaccines. We're funding manufacturing capacity in many different sites, particularly for AstraZeneca, Johnson & Johnson, and Novavax. We may do that for some of the other vaccines, but those are the ones that are the most scalable, low cost, because we're trying to make sure we can end it not just in the rich countries, but also in the developing countries, and that benefits everyone if we achieve that. You know, we're even asking the U.S. to contribute like they've done with other global health crises, which so far they haven't gotten around to that.
So how confident are you that we will have a working vaccine that can be distributed in mass quantities by the end of 2020?
Well, the initial vaccine, in terms of its effectiveness against sickness and transmission, won't be ideal. You know, the phase 3 primary endpoint is for 50% effectiveness, and it may not have the long duration that one of the later constructs will. So some of those, particularly the more expensive ones, will mainly be used in the rich countries as a bit of a stopgap. We'd be lucky to have much before the end of the year, but then enough will complete that during the first half of next year, a number are very likely to get approved, and then we need to scale up. You know, we need billions of doses to get the places that have a hard time doing the sheltering and are already so poor that the economics effects are quite dramatic. And you know, so it's the biggest challenge the global health community's ever faced. I think we'll rise to it, even though, you know, the right investments were not made, and in the case of the U.S. at least, the lack of organization around testing and trials has been very disappointing.
Now, for so many years, the so-called anti-vaxxers, people have said, well, if they lived through a pandemic like their grandparents did, they would think differently. Well, here we are, and the feelings haven't changed. How concerned are you about vaccine misinformation, and that so many people out there might just not get it, even if it is available?
You know, hopefully we'll have, you know, people of both parties who are trusted speaking out in a credible way, people who've been known to, you know, admit mistakes and develop credibility over time with the various constituencies. But, you know, you do have to worry because we do need a lot of people to take the vaccine to get that full herd immunity.
Should it be voluntary or should it be mandatory?
Well, making something mandatory can often backfire, even when you're doing a favor to the community. So I doubt they'll choose that. You might say if you're going to work in an old folks' home or you know, have any exposure to elderly people, there might be some circumstances where it would be required.
What about schools? Should it be mandatory for kids going back to school?
You know, early on, I doubt that'll be a primary thing. I think, you know, the teachers who are elderly or who live in multi-generational households where they necessarily have exposure to older people, they would be a good target. That's more leveraged than doing the full student body in the times when the vaccine is going to be scarce. As it gets more available, yes, you'd like to go for young people, particularly if one of the constructs is very good at transmission blocking.
Now, you already have countries like the United States that are moving to lock down vaccine supplies, buying up huge supplies of potential vaccines, buying up the gear needed to administer them. How harmful is that?
We're asking this vaccine, even if one company invents it, we're saying that they ought to let other companies do the manufacture. And I think it's really exemplary that a number of companies have committed to make this a non-profit activity, just break even, and for the poorest countries, just get their marginal cost. So we're part of funding those extra factories being built at risk, and so they'll be standing by for that approval. The U.S. as yet has not helped come up with procurement money for the poor countries to get access. It's possible that'll get into the supplemental bill. You know, I'm encouraging Republicans and Democrats to include a total of $8 billion, half for therapeutics, half for vaccine, in whatever relief bill gets passed. So the U.S. doesn't look selfish. We deserve credit. We funded more R&D than any country, but on factories and procurement, we've only taken care of ourselves. If we just add this, which is less than 1% of the bill, then it's a typical U.S. picture where we show up strategically, humanitarianly, and to help ourselves to avoid the disease coming back in a super effective way.
We talk a lot about vaccines, but less about therapeutics. What are you seeing in terms of promising treatments out there for this horrible disease? You know, I wonder if drugs are going to play a more important role here than we know.
Oh, absolutely. And it's easier to trial drugs, although the U.S. has been very disorganized on this. We used a UK trial that we funded part of to prove out dexamethasone. You know, Gilead had enough proof on remdesivir to move ahead with that. There's 2 other antivirals coming that actually are orally available, so better in some respects. There's monoclonal antibodies coming, and then there's quite a few additional immune modulators. And so between those different classes of drugs, you know, we should be able to drop the death rate a lot. It's already dropped quite a bit as doctors have realized not to use the ventilator as much, to use oxygen earlier, to use the prone position, and the 2 drugs, dexamethasone and remdesivir, that we have. But before the end of the year, we'll have monoclonal antibodies, and those could be quite dramatic in their benefits.
There's a lot of bad information about therapeutics out there. Debunk some of the myths for us, hydroxychloroquine being one of them.
Well, this is an age of science, but you know, sometimes it doesn't feel that way. You know, just the idea is about testing and hydroxychloroquine. You know, the numbers are quite clear. It got confused because the trials were done so poorly, but there's lots of good things coming in the therapeutic area that are, you know, really proven to work without the severe side effects. So, you know, a little bit slow, but a lot of good news to come in that domain.
There are some raging internet conspiracy theories out there about you wanting to implant chips in people via a vaccine, and you are the center of some, frankly, ludicrous narratives. Does that upset you personally? How do you feel about all that?
Well, it's kind of strange because they take the fact that I'm involved with vaccines. That part's true. You know, it involves saving millions of lives for lots and lots of different diseases, including, you know, HIV and malaria. They just reverse it, that instead of giving money to save lives, you know, making money to get rid of lives. You know, so, you know, just by inverting it and ascribing ill intent, you know, it takes this complex situation that was unexpected and may, you know, make it feel like it's more understandable. If that stops people from taking the vaccine or, you know, looking at the latest data about how they should behave, including wearing a mask, then that's a big problem. I wouldn't have expected this. It's just, you know, a bit strange that it's been politicized and the conspiracy people have had a heyday. It's nice that TikTok's created some competition through innovation. It doesn't seem like preventing that innovation from being available, that makes much sense.
rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
In your time as CEO of Microsoft, you were influential in the company's push into China, and obviously you're still a big shareholder. Microsoft has a long track record and history of working closely with Chinese companies. Now there are also concerns that Microsoft could be too close to China when it comes to potentially acquiring TikTok. Ultimately, do you think Microsoft is a good home for TikTok?
Well, the whole situation is quite novel in terms of, what are the principles involved here? What principles should China apply to companies in China or the U.S.? Are those reciprocal and thought through and predictable? I'm not, at the company now. We've made investments in China. We have, engineers from all over the world, including in China. So Microsoft is very careful about its data promises, and we'll try to have strong relationships globally. We won't do things that are hostile, are viewed as hostile.
What about the app in general? Obviously, it's a very popular app. I mean, is this something that you would like to see in the Microsoft family?
Well, it's nice that TikTok's created some competition through innovation, and it doesn't seem like preventing that innovation from being available, that makes much sense when you want new things out there. I am not in the target audience, so I'm certainly not expert. I've gotten a lot of education from my youngest daughter about this and why she spends time on it. So, they did a great job on it, and there's a lot of ways to take it, and hopefully, that's allowed to happen in some form.
Let's talk about what's allowed. Is the Trump administration correct in trying to force this Chinese company, ByteDance, to sell TikTok's U.S. operations or even shut it down in the United States because it's Chinese? Should the company be subjected to that? I mean, 100 million Americans are using it.
What law? I mean, if this is such a clear thing, why wasn't it clear 3 months ago, 6 months ago? When people make investments, they should understand what's allowed, what's not allowed, and therefore what's the reciprocal principle involved in this thing. So, maybe I haven't read the right article. I'm focused on the foundation and the pandemic, and I'll probably provide advice at some point, but I'm not at the center of this, the decision being made here.
I do want to quickly get your thoughts on the antitrust situation. Having gone through a lengthy review process yourself, do you look at companies like Apple and Amazon and Google and Facebook and think they've become too powerful?
They were lucky. There were 4 of them on the hot seat. I was all by myself with critics sitting next to me. So, hey, I guess we're getting nicer to CEOs than in the old days. I always felt going to Washington and talking about our values and what we did, was helpful, particularly, through this pandemic where these companies have done so well. Now understanding, what's it like to be an entrant into these markets. There's legitimate issues there that, in a kind of a scattershot way, did get raised. The actual economic and death toll from climate change will be much, much, much greater than what we have with this pandemic.
some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed, but the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
You have a book coming out, How to Avoid a Climate Disaster. You think that climate change could be a bigger disaster than COVID. Why is that?
Well, certainly climate change will make entire ecosystems die off. It'll make parts of the world, impossible to live in. And so the actual economic and death toll from climate change will be much, much, much greater than what we have with this pandemic. It's delayed in time, so the current effects aren't as severe. There aren't, 150,000 deaths in the U.S. this year related to climate change. So this is an acute problem, but with a clear solution, and you can go back to normal. Whereas climate change, the scale of the changes required takes decades of invention and decades of scaling out. Perhaps some of the investment restructuring that various countries do after the pandemic to rebuild their economies can have this as a theme, but like other important causes, we shouldn't lose sight of the fact that this also was predictable, and the damage will be very, very large.
And if we don't solve the climate problem, do you believe there will be more pandemics, worse pandemics in the future?
Well, that's not the only thing. You'll have incredible instability because your ability to grow food in large parts of the world will be so diminished that you'll literally have hundreds of millions of migrants, and you won't have a thriving global economy because you will have degraded the ecosystems. And there is no quick fix to that thing, unlike the magic vaccine that's a mere year to 2 years at most to come up with.
Not every billionaire is as generous as you, though, despite your urgings. What are some other ways you think we could narrow the inequality gap? How would you feel about a return to a wealth tax that could combat that?
I've got on my website a lot of ideas for collecting more taxes from the rich that I don't specifically involve a wealth tax because I think there are challenges with that. But, anyway, we can have a more progressive tax system without killing the wonderful risk-taking entrepreneurialism in this country. You can have tax systems that, in my personal opinion, go too far, but we're not at that limit, particularly for capital gains type income. So, yes, governments, if they realize that money isn't free, which macroeconomic conditions are confusing some people about that, at least temporarily, we will need taxes to make up for the resources, because this pandemic, even just within the country, whether it's low-income families, minority families, kids in the inner city, it sadly has exacerbated almost all the inequality in the society. if you're in a suburban school or private school, the online thing is actually not doing all that badly. Whereas if you're a young kid in the inner city, it's not accessible.
I'm not sure what's more terrifying, schools reopening or schools not reopening. I'm in a state where my schools aren't reopening. Should schools reopen right now? And if they don't, is that a year of lost learning for our children?
For kids up through even 8th grade, the data suggests that if you make sure that you give the elderly teachers or teachers who live in a multi-generational household and therefore necessarily exposed to elderly people, if you figure out how to, have them work at the remote high school level and bring in younger teachers without those risks, I do think there's a huge benefit for the younger people. So we ought to be talking more about some age distinctions here. In places with the heavy epidemic, which sadly in the U.S. is a lot of places, high school and college are not going to get organized enough, and the disease transmission rate is much higher as you get up, past, say, 14 or 15. So, it's everybody's scrambling because this is all being done so much at the last minute, where some people, thought the cases wouldn't be raging at this point and didn't really help us think it through.
Well, and this shift to remote work and school is dramatically reshaping companies and families. And I wonder how you see that having a lasting impact on society.
Well, there are great things like telemedicine that people have been open-minded to because they've kind of been forced into it. And there's ways to shape that for lower cost and higher quality. The notion broadly of how many office workers need to go into the office, how many, which weeks, which days, how many hours, that's going to get a really big rethink business by business. And, you might reduce the total commercial space needed pretty dramatically and take some pressure off of these inner city cores where the rents and traffic are very problematic. And so, we're not going to do as much business travel, I don't think, because, people have been forced to learn Zoom and Teams, and the R&D on those things is going to make them way better, even just a year from now than they are right now.
I've been following how Melinda has been talking about the impact this is having on women and families. She's been very outspoken about how you and her have navigated work-family life. And I'm curious how you're navigating this time. There's this feeling in the home of whose job is more important, mom's or dad's. How do you answer that question?
Well, I'm very good at doing the dishes. I'm not as good at preparing the food. So hopefully some specialization kicks in there. Our kids are older, so we're really lucky we've actually gotten more time with them than we would have under normal circumstances. This is a hugely difficult thing, and it's even hard to measure how tough it's been for those without what we're lucky to have.
Worst case scenario for where we are in a year, and what's the best case?
Well, the best case is that it's largely gone through natural immunity and vaccine-driven immunity, and that we take this lesson and get ready for the next thing, and that that we are able to get most of the jobs back and get eventually the economy back to where it was in January. Will that take 1 or 2 years? That's certainly within the realm of possibility. The worst case is the disease is still raging, but because I get hands-on with the therapeutic advances, vaccine advances, I don't think at the end of 2021, certainly in the developed countries, that will be the case. I think it's very, very likely the U.S. will be out of this by the end of next year.
All right. Well, that is good to hear. Bill, thank you so much for joining us. We will tell Melinda that you are up for doing more dishes.
Absolutely.
Bill Gates, wonderful to have you here on Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
All leaders are different, but all leaders in many ways are the same. They all have failed at something.
We don't have enough time for me to list all of our failed experiments, but the big winners pay for thousands of failed experiments.
They all are very persistent.
When I had pancreatic cancer in 2009, there was a senator whose name I don't recall, but he said I would be dead within 6 months. That senator is now no longer alive.
They all have a sense of purpose.
I get to do every day what I love with people that I love. I mean, it doesn't get any better than that.
They all have something they want to achieve with their life.
I do hope that infectious disease is largely eliminated as a problem.
They all know how to get along with people.
Why do I have a friendship with him? Well, because he's called a brother with a different mother.
They all know how to communicate with people.
What gave me the power in the seat and the power with the microphone was I always saw myself as the surrogate for the audience.
And they know how to make a difference in the world.
If you want to be president, realize it's about the people, not about you.
I hope to inspire people by these stories and hopefully give us a new generation of leaders in the future. I met Jeff Bezos relatively early in Amazon's history. One of the companies that my firm owned had helped him by providing a bibliography of books in print. I didn't think the deal we'd gotten was so good, so I went out there to see whether I could change the deal and actually get some stock in his company. He said, well, he didn't need us as much now as he did a year or so before, but because we were helpful, he did decide to give us some stock in his company. We actually didn't have that much faith in the company, so when he took the company public, we sold our stock. That was our biggest investment mistake. That stock today is worth $5 or $6 billion. I wish I'd held on. You have become the wealthiest man in the world. Is that a title that you really wanted or not? Is it a burden?
I can assure you I have never sought that title. I would much rather if they said like, you know, inventor Jeff Bezos or entrepreneur Jeff Bezos or, you know, father Jeff Bezos. Those kinds of things are much more meaningful to me. And it's an output measure. If you look at the financial success of Amazon and the stock, I own 16% of Amazon. Amazon's worth roughly $1 trillion. That means that what we have built over 20 years, we have built $840 billion of wealth for other people. And that's great. That's how it should be. You know, I believe so powerfully in the ability of entrepreneurial capitalism and free markets to solve so many of the world's problems. Not all of them, but so many of them.
So you live in Washington State, in Seattle, or outside of Seattle. Now, the man who was the richest man for about 20 years is named Bill Gates.
Yeah.
And what is the likelihood that the two richest men in the world live not only in the same country, not only the same state, not only the same city, but in the same neighborhood? I mean, is there something in that neighborhood that we should know about? And are there any more houses for sale there?
After I saw Bill not too long ago, we were joking about the world's richest man thing, and I basically said I said you're welcome, and he immediately turned to me and said thank you. But no, Medina is a great little, it's a suburb of Seattle, and I don't think there's anything special in the water there. And I did locate Amazon in Seattle because of Microsoft. I thought that big pool of technical talent, would provide a good place to recruit talented people from, and that did turn out to be true. So it's not a complete coincidence. There's some correlation there.
What propelled you to say, I'm going to start a company selling books over the internet, and I'm going to do it from Seattle? Where did that idea come from?
I came across the fact that the web, World Wide Web, was growing at something like 2,300% a year. This is in 1994, and anything growing that fast is, even if its baseline usage today is tiny, it's growing so fast, it's gonna be big. And so I looked at that and I was like, there's gotta be, I should come up with a business idea that get, on the internet, and then let the internet grow around this, and we can keep working on it. And so I made a list of products that I might sell online, and I started force ranking them. And I picked books because books is super unusual in one respect, which is that there are more book items in the book category than there are items in any other category. There are 3 million different books active and in print around the world at any given time. So the founding idea of Amazon was to build universal selection of books.
What propelled you to sell things more than books?
We started selling music, and then we started selling videos, and then I got smart, and I emailed 1,000 randomly selected customers and asked them, besides the things we sell today, what would you like to see us sell? And that answer came back incredibly long-tailed. The way they answered the question was with whatever they were looking for at that moment. So like, I remember one of the answers was, I wish you sold windshield wiper blades because I really need windshield wiper blades. And I thought to myself, we can sell anything this way.
So who came up with the idea of Prime? Prime seems to be a great way to get money in advance of people actually getting the services.
Yeah.
Whose idea was that?
Actually, it's very interesting. So like many inventions inside of a team, and I love team inventing is my favorite thing. So I tap dance into the office. I love Amazon. I have so much fun there. I love Blue Origin. I love the Washington Post. But Amazon is my full-time job. We're always wondering, what could a loyalty program be? And then actually kind of a junior software engineer came up with this idea, not as a loyalty program, but this idea that we could offer people kind of an all-you-can-eat buffet of fast, free shipping. And when we modeled that, so then, the finance team went and modeled that idea. And the results were horrifying. That we would offer unlimited shipping. Shipping is expensive. And that we would, and customers love free shipping. But we could see, again, back to that, you have to use heart and intuition. There has to be risk-taking. You have to have instinct. All the good decisions have to be made that way. You do it with a group. You do it with great humility. Because, by the way, getting it wrong isn't that bad. That's the other thing. When we make mistakes, and we've made doozies like the Fire Phone and many other things that just didn't work out, we don't have enough time for me to list all of our failed experiments. But the big winners pay for thousands of failed experiments. So you try something like Prime, and it was very expensive at the beginning. It cost us a lot of money, because what happens when you offer a free all-you-can-eat buffet? Who shows up to the buffet first? The heavy eaters. It's scary. It's like, oh my God, did I really say as many prawns as you can eat? Oh. And so that is what happened. But surely we could see the trend lines. We could see that, all kinds of customers were coming, and they appreciated that service.
So you've started Blue Origin a little bit in secret, then you've made it public. You're putting $1 billion or more of your own personal capital into it every year.
Next year it'll be more for the first time.
All right. And what are you going to get out of it? Are we going to have people going into space? What is the purpose?
This is this is the most important work I'm doing, and I have great conviction about that. It is it's a simple argument. This is the best planet. We have now sent robotic probes to every planet in this solar system. Believe me, this is the good one. And so this gem of a planet, we're finally, as a species, big enough to really impact it. So there's all sorts of problems that we are about to face, because for the first time in our civilizational history, going back thousands of years, we're now big compared to the size of the planet. We can fix that problem, but we can fix it in exactly one way, by moving out into the solar system. And so I want to build space infrastructure so that the next generations of people can use that infrastructure the same way I used UPS and FedEx and so on to build Amazon. And so that's what Blue Origin is all about.
So do you ultimately want that to be your legacy, or Amazon? And what would you like to have as your legacy?
World's oldest man. That's a famous line I like. But the real thing is, it'll be whatever it's going to be. I'm going to be proud of the things I live my life in such a way that when in a quiet moment of reflection and I'm thinking back on my life, that I have as few regrets as possible. And I don't, what will my legacy be? I have no idea.
Why have you decided to even work harder than you did before?
If there were a theme song to my life, Amazing Grace would be one of them, and Keep On Using Me Till You Use Me Up would be another one.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
As many of you may know, I'm from Baltimore. And when I went away to college, my mother kept calling me saying, "David, you're missing a new newscaster in Baltimore. She's spectacular. She's the best we've ever had in Baltimore. And in fact, she may become national." And I rolled my eyes and said, my mother really doesn't know much about television. Nobody from Baltimore is going to become a national newscaster. Well, that broadcaster's name is Oprah Winfrey. And as always the case, my mother was right. Well, the live audience doesn't intimidate you, right?
Not a bit.
Okay.
I feel right at home, actually. It's the one thing I miss from the Daily Show. You know, every now and then somebody will say, "Do you miss the show?" No, I don't miss the show. What I miss is the people, is the camaraderie.
When did you realize in Chicago or Baltimore that you actually had a skill as an interviewer that was really better than anybody else's? And where do you think that skill came from?
I never thought it was better than anybody else's. What I do think I have that is really uniquely my own is my ability to connect to the audience. Because my skill comes not from my interviewing ability, my skill comes from my listening ability, and my skill comes from me knowing fundamentally inside myself that I am no different than the audience. So what gave me the power in the seat and the power with the microphone was I always saw myself as the surrogate for the audience.
You are now the CEO of your company. You're the owner and the CEO, and you've got thousands of people working for you.
Yeah.
And as a CEO, do you have to say no to people all the time, and is that hard to do?
You get other people who say no.
No. Okay.
Saying no is hard. That is one of the big lessons, life lessons for me. I grew up, obviously, girl, raised in the South, women need to please, wanting to please everybody. So it took me a long time to get that lesson of only saying yes to what you intend to say yes to. And so I tried to do all of my business decisions and personal decisions based upon my intention.
What drives you to keep working so hard? You could, you and I are in the 60s category. And so when you're in your 60s, you've lived more than you're going to live, realistically. So when you realize you've lived more than you're going to live, you can say, why not relax a little bit? Why not just ease up? Why have you decided to even work harder than you did before?
Because I think, David, that everybody, the thing that works for me all these years, whether it was the magazine or which I still have, or whether it was the show, I understood that there's a common denominator in the human experience. And I want the same thing you want, which is the same thing you want and you want. What we all want is to be able to live out the truest, highest expression of ourselves as a human being. That doesn't end until you take your last breath. What is the truest, highest vision that you hold for yourself? No matter where you are in your life, there's always the next level. There's always the next level to the last breath. So I feel that I always knew that I would be done with the show when I felt like, oh, I've said as much as I could say here on this platform. And then how will I be used? If there were a theme song to my life, Amazing Grace would be one of them, and Keep On Using Me Till You Use Me Up would be another one. Right? You know that Bill Withers song? Yes. So I feel that until you have used your value as a human being, you're not done.
Okay. So today, if you look back on what you've achieved already, and let's suppose you've got a long way to go before you're finished achieving everything, what would you say are the greatest pleasures that you have received, or what you're most proud of?
Okay, so these are good. Thank you. This is good.
Okay. All right. So,
this is good.
Well, I watch your interview show, so I know how to do some interviews.
I think the thing that I am most proud of reminds me of when I had done my school in South Africa. I have a school in South Africa with girls, and I wanted to create this school.
This is just celebrated its 10th anniversary.
Just celebrated 10th anniversary. I've got girls from Brown to Stanford to Elon, all over the United States going to school. I have 10 graduations to attend in 2017. But I remember when I started the school, and I said to my beloved friend, Maya Angelou, I said, Maya, I'm just so proud that I was able to create this school. And I said, this is going to be my greatest legacy. And Maya said to me, you have no idea.
Right.
You have no idea what your legacy will be, she said to me, because your legacy is every life you've touched. And that shifted the way I saw legacy or what you leave behind or what you do. Because Maya was explaining to me that, over all the years of watching your show, everybody who decided that they were going to go back to school or lose weight or no longer hit their children or get out of a bad marriage, all of those people who have seen and experienced your voice, and the same thing with everybody here, you have no idea what your legacy will be. Your legacy is every life that you've touched. And we like to think of it, I know you have done amazing things with your philanthropy. We like to think that these great philanthropic moments are the ones that leave the impact or will make the huge difference in the world. But it's really what you do every day. It's how you use your life to be a light to somebody else's, and it's how you use your work as an expression of your own art, whatever that is. So I think I would say the girls, as I get to watch them now graduate from college and move into their lives. But really, there is a moment that happened to me just about a year after I went national. There was a woman in Ann Arbor, Michigan, who wrote me a letter that will go on I'm not going to have a tombstone, but if I had a tombstone, wasn't cremated, it would go there. She said, Oprah, watching you be yourself every day makes me want to be more of myself. And I just don't know of anything better than that.
Any word of advice you give to somebody who's a young investor who would like to emulate you, what you would recommend that they do to kind of build something close to what you've done?
I think you should look for the job that you would want to hold if you didn't need a job?
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
I obviously made a mistake in selling my stock in Amazon too soon, but a bigger mistake was made by somebody who rejected Warren Buffett at Harvard Business School. As a result, Warren went to Columbia Business School, and he went on to create the greatest investment career in the history of investing. He is an extraordinary investor, but also an extraordinary person. When you graduated from high school, you weren't as interested in academics, I assume, at that time?
I was not interested.
And your high school yearbook said he's likely to be a stockbroker, but he's very good in math. Why did you go to Wharton, and why did you only stay 2 years there?
I didn't want to go to college, but my dad wanted me to go to college, and we didn't have SATs then, but he practically would have done the SATs for me. So in the truth, I always wanted to please my dad. I mean, he was a hero to me and still is. But so he kept kind of jollying me along and said, well, why don't we just fill out an application for the hell of it? And so he suggested Wharton, and I applied there, and they let me in. And after the first year, I wanted to quit and go into business. And my dad said, well, give it one more year. And so I went the second year, and I said, I still want to quit. And he said, well, you know, you've got almost enough credits. If you go to Nebraska, which I was quite willing to do, for 1 year, you can get out in 3 years. So that's what I did.
Has Wharton ever called you up and said, well, you were a half graduate, you should give us some money, or they never bother you?
So far, they haven't tried that line, but they may after they watch this.
So after that, you wanted to go to business school?
Yeah, I'd won some minor scholarship at Nebraska to go to any graduate school I wanted to, that they'd give me $500. And so I applied. My dad suggested Harvard, so I applied.
And you didn't get in?
I didn't get in. I mean, you know, it took 10 minutes for the guy near Chicago interviewed me. So I spent about 10 hours going to see him. And he looked at me and he said, forget it. And
have you ever run into that guy again, or have you ever heard from him since?
No, he needs protection now.
So I guess Harvard doesn't come after you for money because they turned you down. But you went to Columbia Business School, and why did you go to Columbia?
Well, I was at the University of Omaha, what was then called the University of Omaha's library in August, and I was leafing through catalogs, and I just happened to see that Columbia had Graham and Dodd as teachers, and I'd read their book, but I had no idea that they were teaching. So I wrote Dean Dodd, and I said, dear Dean Dodd, I said, I thought you guys were dead. I said, but now that I find out you're alive, I'd really like to come to Columbia if you can get me in.
So you did, I assume, pretty well at Columbia Business School?
I did okay there, yeah.
What would you say is the reason for your ability to do this? Is it that you studied the companies more than anybody else? You stuck to your principles? You're smarter than other people? People were just caught up with fads? You didn't get caught up with fads? What would you say is the reason for this success?
Well, the first two are to quite an extent. We bought businesses that we thought were decent businesses at sensible prices, and we had good people to run them, but we also bought marketable securities in Berkshire. Over time, the emphasis shifted from marketable securities over to buying businesses.
When you're doing these analyses then and now, do you have computers that help you, or how did you actually read all? Would you just get printed materials?
Pretty much the same way, except there's fewer opportunities now. But I met Bob Woodward back, and he'd just come out with all the president's men, and all of a sudden, as below 30 years of age, he was getting quite wealthy, and we had breakfast or lunch over at the Madison Hotel. And he said, "What do I do with this money?" And I said, investing is just about assigning yourself the right story. I said, imagine Ben Bradley this morning said to you, what is the Washington Post company worth? What would you do? You have to write the story in a month. You'd go out and interview TV brokers and newspaper brokers and the owners, and you'd try and value each asset. I said, that's what I do. I assign myself the right story. And it's nothing more than that. Now, there's some stories I can't write. If you ask me to write a story on, what is some glamorous but non-profit-making business worth, I don't know how to write that story. But if you ask me to write a story on what is Potomac Electric Power worth or something like that, I can write the story, and that's what I'm doing every day.
People must call you every day and say, I have a deal for you, it's perfect. And how often do any of these deals ever pan out?
They don't call every day, and we've made our criteria fairly clear. So there's relatively few that call, and when somebody calls, I can usually tell within 2 or 3 minutes whether a deal's likely to happen or not. There's just a half a dozen fillers, and it either makes it through the fillers or it doesn't.
What is it that you would like to have as your legicy, as you think?
Well, I'd like to be the oldest man that ever lived, actually. But no, I like teaching, and so if I've been a decent teacher, and I have a lot of university students come out every year.
And today, is there anything on your bucket list that you would like to do that you haven't done?
I'd have done it. If there's anything I wanted to do, I'd do it. Money has no utility to me. Time has utility to me. But money in terms of making trips or owning more houses or having a boat or something, it has no utility to me whatsoever. It has a lot of utility to other people, which is the reason for the Giving Pledge.
What motivates you to still run a company when most people your age are playing shuffleboard or they're relaxing or doing something?
Yeah, they spend all week planning their haircut usually. I get to do every day what I love with people that I love. I mean, it doesn't get any better than that.
Any word of advice you give to somebody who's a young investor who would like to emulate you, what you would recommend that they do to kind of build something close to what you've done?
I think you should look for the job that you would want to hold if you didn't need a job. I mean, you're probably only going to live once. Shirley MacLaine may differ with that, or a few people, and you don't want to go sleepwalking through life, and you really, whether you make X or 120% of X, it really isn't remotely as important as to whether, in most cases, you marry the right person and you also find something that you would do if you didn't need the money. And I've had that job for 50 or more years.
Warren Buffett called you one day and said, by the way, I'm going to give you most of my money. Were you surprised when he said he wanted to give you all this money from his wealth to your foundation?
It was a huge honor, a huge responsibility, an incredible thing, because it let us raise our level of ambition even beyond what we would have done without that by most definitions, the most generous gift of all time.
you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
The world's most famous college dropout is Bill Gates. Over the past quarter century, he's been about the wealthiest person in the world, and now he's the greatest philanthropist in the world. I first met Bill when he came to my office to share a cheeseburger. We talked about philanthropy, and I really recognized then that he was a gifted person. He's a person of extraordinary intellectual capabilities, a great workaholic, and also a person with great compassion. You went to Harvard and you dropped out. Have you ever thought how your life could be better off if you had gotten your Harvard degree?
Well, I'm a weird dropout because I take college courses all the time. I love learning company courses and things, so I loved being a student. And there were smart people around, and they fed you, and they gave you these nice grades that made you feel smart. So I feel it was unfortunate that I didn't get to stay there, but I don't think I missed any knowledge because whatever I needed to learn, I was still in a learning mode.
You built one of the great technology companies in the world and one of the great companies in the world, and now you're building and operating one of the great foundations in the world. How do you compare the challenge of building Microsoft to the challenge of now running the Bill and Melinda Gates Foundation?
Well, I think they have more in common than people might expect. The idea that you find what an innovation is going to be, really stick to it, build a team behind that, have some setbacks and successes, kind of a theory of change. Now, my Microsoft work was when I was very young. I started when I was 17, and that was my primary focus until I was 53 when I made the transition. And for the early part of that, I was kind of maniacal. I wasn't married, no kids. I didn't believe in weekends. Until I was about 30, I didn't believe in vacations at all. So it was incredibly fulfilling to write the code and be hands-on, stay up all night. So for my 20s and 30s, I think the Microsoft thing was perfect. I didn't have the breadth of knowledge that would let me play my role at the foundation. I think it was a good preparation. And then after I met Melinda, got married, started having kids, I was looking at the world more broadly, thinking about where the wealth should go. And I'd say they're equally difficult. You always know you could be doing better, that you should learn more, that building the team and thinking about things in a better way. So you see the positive results, but you always want to do even better.
So you have decided that your foundation would focus principally, but other things as well, but principally on health in Africa and K-12 education in the United States. Is that right?
Yeah, health of all the poorest, but okay. Africa's paradigmatic.
So how did you come to those conclusions that those were the two things you wanted to work on as opposed to everything else?
We talked about it a lot, so that's the decision that Melinda and I made. We wanted to take the greatest injustice in the world, something that we could make a huge difference in, and that's health. Now, we broadened that a bit by doing agriculture and sanitation and some other things. And then we wanted to take a cause that would help the U.S. Be as strong as it could, and in that case, trying to help improve educational opportunity is our big thing.
When your mother first said, I'd like you to come and have dinner with me and Warren Buffett will be here, you should meet him, you didn't seem that interested. Why was that?
Well, Warren, I thought of as somebody who bought and sold securities, which is a very zero-sum thing. That's not curing disease or a cool piece of software. And the idea of, kind of looking at volume curves, and it doesn't invent anything. And so I thought my way of looking at the world, what I wanted to figure out and do, and what he looked at, that there wouldn't be much intersection. And that's why it was so shocking when I met him. He was the first person to really ask me about software and software pricing, and why wasn't IBM, with all of their strength, able to overwhelm Microsoft, and what was going to happen in terms of how software would change the world. And he let me ask him about, okay, well, why do you invest in certain industries, and why are some banks more profitable than others? And he was clearly a broad systems thinker. And so it started a conversation that has been fun and enriching, and an incredible friendship that was completely unexpected.
Warren Buffett called you one day and said, by the way, I'm going to give you most of my money. Were you surprised when he said he wanted to give you all this money from his wealth to your foundation?
That was a complete surprise, because Warren is the best investor, and he's built this unbelievable company. And he was giving me advice about all the things I was doing. I was learning so much from him. But his wealth was devoted to a foundation that his wife was in charge of. And so tragically, she passed away. And so then he had to think that his initial plan wouldn't make sense. And much to my surprise, he decided that a part of the wealth, a little over 80% of it, would come to our foundation. So it was a huge honor, a huge responsibility, an incredible thing, because it let us raise our level of ambition even beyond what we would have done without that by most definitions, the most generous gift of all time.
When people look back on what you've done 20 years from now, 30 years from now, what would you like to have people say Bill Gates achieved?
Well, I don't think it's important for me to be remembered specifically. I do hope that infectious disease is largely eliminated as a problem, so that nobody's having to talk about it and people can focus on other issues. That would be a huge, great thing. If our work has helped improve U.S. education, that would be a huge, great thing. Most importantly are the people who really know me, my kids, that they feel I was a good father, gave them an opportunity to go create their own life.
What is it that gives you the greatest hope for the future about the court and the way it works?
I think that all of us revere the institution for which we work, and we want to leave it in as good shape as we found it.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
It's really a reminder, isn't it?
isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
How does it feel to wake up in the morning and know that 350 million people want to know about the state of your health? Well, that's the case with Ruth Bader Ginsburg. She is the rock star of the Supreme Court. There has never been a Supreme Court justice as popular as she is with the general public. And now at 87 years old, she's going to the court every day, still writing opinions, an extraordinary athlete as well, working out every day with her trainer. I've met her trainer, and I think her trainer is more than I can really take on. How does it feel to get up in the morning and know that 330 million Americans want to know the state of your health that day?
How does it feel? Encouraging. As cancer survivors know, that dread disease is a challenge, and it helps to know that people are rooting for you. Now, it's not universal. When I had pancreatic cancer in 2009, there was a senator whose name I don't recall, but he said I would be dead within 6 months. That senator is now no longer alive.
But you can't remember his name.
No, I don't remember his name.
But your current view is that as long as you're healthy and able to do the job, you intend to stay on the court. Is that correct?
As long as I'm healthy and mentally agile.
In recent years, you've also gotten a lot of attention for your exercise regime.
Yeah.
So when did that start? And you have your own trainer, and are you still, lifting weights or whatever you're doing?
As recently as Tuesday. I have been with the same personal trainer since 1999, when I had my first cancer bout. I had colorectal cancer. And my dear husband said, after going through surgery, chemotherapy, radiation, I looked like a survivor of Auschwitz. He said, you must do something to build yourself up. Get a personal trainer. And that's when I started in 1999. Sometimes I get so absorbed in my work, I just don't want to let go. But when it comes time to meet my trainer, I drop everything.
Right.
And as tired as I may be in the beginning, I always feel much better when we finish.
So if you have a 5-4 prospective decision, does one of the justices go to another justice and say, why don't you change your mind? Does that work very much? Or?
No, there's no horse trading at the court.
Nobody says, if you vote for me on this one, I'll vote for you on that one. That doesn't happen.
It never happens, but we are constantly trying to persuade each other. And most often, we do it through our writing. Every time I write a dissent for 4, I am hopeful that I can pick up a 5th vote.
Many people are surprised at the civility that exists between justices, even though they write not such favorable things about each other. So, for example, Justice Scalia used to say not such wonderful things about your views, and you then still went to the opera with him. Was that a little awkward or hard to do?
And not at all. And Justice Scalia and I became friends when we were buddies on the D.C. circuit. What did I love most about him? His infectious sense of humor. When we were 3 judges on the Court of Appeals, he'd sometimes whisper something to me. It would crack me up. I had all I could do to contain hysterical laughter.
What is it that gives you the greatest hope for the future about the court and the way it works?
I I think that all of us revere the institution for which we work, and we want to leave it in as good shape as we found it.
So we have a few questions from people who are attending today. If you could change one thing about the Constitution, what would it be and why?
I would add an equal rights amendment to the Constitution. And I'll explain it this way. When I take out my pocket Constitution to show my granddaughters, I can show them the First Amendment that guarantees freedom of speech and of the press, but I can't point to anything that says women and men are persons of equal citizenship stature. Every constitution in the world written since the year 1950 has the equivalent of that statement. Men and women are persons equal in stature before the law. So I would like my now great-grandchild to have a constitution that includes that statement, that this is a fundamental premise of our society, just the way freedom of thought and expression.
What gives you the most hope for the future?
My granddaughters.
Okay.
I'm very proud of my eldest granddaughter, who is a lawyer, cares a great deal about our country and about its highest values. She and other young people like her, I think, will help us get back on track.
Okay. And what do you think is the biggest threat to our democracy?
A public that doesn't care about preserving the rights we have. You know that great speech on liberty by Judge Learned Hand? And he says that the fire, he said, if the fire dies in the hearts of people, there's no constitution and no judge that can restore it. So my faith is in the spirit of liberty.
What would you say in your 8 years you were most proud of having done?
I was most proud that when I left office, we had the broadest period of shared prosperity in 50 years.
What would you say in your 8 years you
Well, my daughters loved me.
In my interviews, I try to bring out leadership skills and try to talk to people about leadership and what made them a leader. And one of the most interesting interviews I've ever done was when I had two leaders together, George W. Bush and Bill Clinton. It's a rare occasion when two presidents come together, and it's a rare occasion when a Democratic president and a Republican president become great friends. Not only did they talk about leadership, they talked about their friendship, and they also were quite humorous. You're now both former presidents, and what's the difference between being a former president and president?
Nobody plays a song when you walk in the room anymore. I mean, I was lost for the first 3 weeks after I left office. I kept waiting for the music, you know. Actually, it's wonderful. I've had almost very rarely in 17 years have I even given a thought to, well, I wish I were there, I could do this, or I missed this, or I think, you know, you have to be grateful for the time you have and then realize you should focus on today and the future.
Well, so I woke up in Crawford the day after the presidency, expecting someone to bring me the coffee. Laura didn't bring the coffee. I think the thing that startled me was the sense of having no responsibility. In other words, during the presidency, you kind of become accustomed to the responsibility you have. First, it's pretty grave, and then slowly but surely it becomes a natural part of your life. And then you wake up the next day and you have no responsibility. And that was probably the most stunning thing for me.
Today, when former presidents get together, which happens in funerals, unfortunately, and also sometimes when libraries open, it's not common that you get together. What is it like in the back room? What do you actually say to each other when your former presidents are getting together? Do you actually tell secrets that you never tell anybody else? Or?
Yeah, generally we say, when's this program going to start and when's it going to end?
And he'll say to me, give shorter answers.
You ran against President Bush 41. It was a bitter campaign. He was defeated for re-election. How did you manage later to develop a close relationship? Wasn't that very difficult or awkward in times because you had run against each other? He had called you names, you had called him names. How did you come together?
He deserves a lot of credit because if he hadn't asked us to do this tsunami work together, I'm not sure the relationship would have ever flowered the way it did. And we just like being together. And, you know, it's like anything else. Sometimes you click with people and sometimes you don't. I always admired him. We just started working together on this tsunami thing. It's easy to forget now because it was a long time ago, but I mean, they lost 300,000 people in a matter of minutes in several countries. And then President Bush said, America's got to do our part. Most people couldn't find a lot of those little countries on the map, but they were part of the global community that he was willing to take our fair share of responsibility for.
But that was your relationship with President Bush 41, but how did you become close? Because you...
Well, I got a different take on what I think is one of the most...
All right.
One of the most unique relationships and an important relationship in U.S. political history. I think it starts with Bill Clinton being a person who refused to lord his victory over Dad. In other words, he was humble in victory, which is very important in dealing with other people. And I think Dad was willing to rise above the political contest. In other words, it starts with the individual's character. And both men, in my judgment, displayed strong character. And therefore, the friendship was able to be formed. Now, why do I have a friendship with him? Well, because he's called a brother with a different mother. He hangs out in our...
Because when you campaign...
He hangs out in Maine more than I do.
Also, you know, I recognized that he was 44 days older than me.
Okay.
So I called him on his birthday and I said, I'm calling you on bended knee because this begins my 44 days of respect for my elders.
When I was president, I would call Bill, and, you know, he was very helpful. And it wasn't, you know, it was, he knew a lot about a variety of issues, particularly international affairs that I was interested in. I knew I could count on him for good advice, and he was gracious in receiving my calls.
Now, your father was president, so you obviously were in the White House. You saw what he did right or what he might have done wrong. Did you take any lessons from that, or were you trying to separate yourself from your father?
No, I learned a lot from watching him, and I wasn't interested in separation from him, and he wasn't interested either. We've got a great father-son relationship, and yeah, I learned a lot from watching him. And my most startling moment came right after the inaugural parade. I decided I was going to go in the Oval Office to see what it felt like. And unbeknownst to me, Andy Card had called upstairs in the residency and asked Dad to come in. And so I was sitting in the Oval Office at the desk there, kind of just taking it all in. And in walks my dad. And I said, "Welcome, Mr. President." He said, "Thank you, Mr. President."
Well, that must have been something. What was it like when your mother walked in the Oval Office the first time and you're the President of the United States?
She started laughing out loud. I mean, it was so ridiculous, you know, I mean, the idea of it, that it could have ever happened.
Only 13 people have served 2 consecutive terms, and you were 2 of the 3, 2 of 13. So what would you say in your 8 years you were most proud of having it done?
I was most proud that when I left office, we had the broadest period of shared prosperity in 50 years. That is, where the bottom 20% income in percentage terms increased more than the top 20%, and nobody was mad at anybody else over it.
What would you say in your 8 years you
Well, my daughters love me.
Right? If somebody wants to be President of the United States, is the quality that is most important hard work, intelligence, optimism, luck? What do you think it takes for somebody who says, I want to be president, I want to be like you, I want to be like you?
Humility. I think it's really important to know what you don't know and listen to people who do know what you don't know.
I also think you have to begin with the end in mind. That is, you have to say, yeah, you got to win the election, but why in the heck are you running? If you want to be president, realize it's about the people, not about you. And when it's over, and that's what a lot of these people who are real arrogant in office, they forget. Time passes, and it passes more quickly than you know. You want to be able to say, people are better off when I quit. Kids had a better future. Things were coming together. You don't want to say, God, look at all the people I beat, or the people I worked over. I think the most important thing is to be humble, to listen, to realize everybody's got a story. All the things I learned as a kid.
Listen, the only thing you disagreed with in my platform was that Texas ought to take Arkansas.
Now, what I disagreed with is he wanted to get all of our water and not pay very much money for it.
That's right.
So, President...
and I would have swapped it out for Texas oil. I told him, you know, barrel for barrel.
President Clinton, President Bush, I want to thank you for your service to our country and to thank you for the leadership you've given to so many people, and thank you for what you're doing in your post-presidency. Thank you very much.
Thank you all.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Hello, I'm Scarlett Fu. Welcome to Bloomberg Front Row. Today, I'm talking to Franklin Templeton President and CEO Jenny Johnson. She just became the fourth member of her family to lead the investment firm her grandfather founded more than 70 years ago. But she's taking the reins at a turbulent time for the asset management industry. Jenny believes the finance world needs to change its image and accentuate the positive.
I think we're often, by the media, thrown in as just, you guys are a bunch of greedy Wall Street people. The reality is, I can tell you the colleagues that I work with, my peers in the industry, really try to focus on what's doing right for clients.
We discussed Franklin Templeton's $4.5 billion purchase of Legg Mason, the future of asset management, her firm's strategy in a time of competition and consolidation, and diversity as a leading woman in a male-dominated field.
I was asked by an employee at one point, well, what do you do when you walk in a room and you know that all the men are thinking that you're not capable or, competent? And I said, boy, I've never walked in the room and thought that. And by the way, never let that be in your head.
Here's my conversation with Jenny Johnson. I want to start on the Legg Mason purchase. Franklin Templeton announced Legg Mason purchase in February, right before COVID hit and sent markets reeling. You closed the deal ahead of schedule. How has your thinking on the necessity of this deal evolved as market conditions have changed?
Yeah, it's interesting because when it happened, of course, as you mentioned, the market tanked with COVID coming on, and we never lost sight of the fact this was a growth story for us. We're long-term in how we think about the business. For us, it was about an all-weather product lineup, filling in product gaps that we had, really diversifying our client base. We're now 50-50 retail institutional, and frankly, greater scale in really important markets like Japan, Australia, and the UK. And so, we tend to run this business over the long term. That minor kind of setback, we still felt like it was absolutely the right thing to do.
But if you were to look back in a perfect world, is there any part of the deal that you wish you could redo, maybe?
No.
All good, even the price, given how much markets have fallen since then?
Well, markets are coming back up. And so, again, the hard part about asset management is rarely do people sell when markets go down. So, the alternative was maybe that deal wouldn't have been available to us. You can't control the markets, but we can control our strategy. We can control, again, the key to having really an all-weather product lineup. So regardless of where the market is and where the economy is, there's something that's appropriate for clients.
Now, when it comes to the integration of the two firms, is there anything that might change when it comes to your plans because of the new normal that we're living in?
So what made the Legg Mason deal work for us is we've always, as you know, we've done large asset management deals in the past with Templeton Mutual Series, high net worth business, fiduciary trusts, and frankly, a lot of them across the globe, and most recently, Benefit Street Partners. What we understand is that we are buying an investment team and an investment process. So we have always left those as independent, sitting on a very powerful base of technology, risk management. And we think the world going forward, that things like data analytics could be more and more important. So the ability to bring that in and spread it over a bigger base is better. Well, Legg Mason was structured exactly with that, with its what they called affiliates, so the individual investment teams reporting into a holding company. And so our complete focus on integration has been at the holding company level. You only need one holding company, and combining distribution, because obviously you need, just one team servicing your clients. And so bringing those together it was different in that we had to do this assessment via video. That wasn't what we were planning on doing, but we closed 30 days early. So I think it worked out pretty well.
Franklin Templeton now has $1.4 trillion in AUM, reversing years of falling AUM. What's the significance of being in the $1 trillion club?
Well, I think what is key is our business. There's a lot of pressures on the business, and I think one really important component of active management is going to be this need to get massive amount of data and to get data insights from non-traditional sources. The deeper your data lake and the wider your data lake, the breadth of your data lake is going to be able to give you greater insights. And so we think being able to spread that type of initiative across a broader client base is better.
Let's talk about active management, because now, if any, is the time for active to shine. If you can't do it now in this period of upheaval and volatility, the perception that your company or the industry at large is in deep trouble, is in some kind of long-term secular decline, becomes that much harder to shake. Can you talk a little bit about the pressure to get this right now for Franklin Templeton and for the industry overall?
Well, first of all, passive tends to do very well in momentum markets, right? It's a market cap weighted. And I want to talk about this from an equity standpoint and then a fixed income standpoint. So from an equity standpoint, you have 6 stocks in the S&P 500 that has basically generated 10 times the return of the rest of the S&P 500, right? So if you were an active manager and you underweighted any one of those 6, it probably didn't matter that you got the sector bets or the individual stock bets in the other sectors right, because there was such a barbell as far as returns. I don't think that carries forward at the same level. And so, we look at it just today. I was having a conversation with our biotech team, and, we have PhD scientists on our biotech team. And you think about all the companies that right now are talking about the vaccines that they're now developing and how that's impacting their market cap. Well, the biotech team's comment to me was, Jenny, good science is what translates into good returns. You have to understand the approach on these. That's fundamental analysis. That's having people who are so steeped in individual sectors and understanding behind them that they can make those picks. I think that becomes very important going forward. And then I just say on the fixed income side, look, the fact, if you just think conceptually that passive fixed income is about when companies take on more debt, you're increasing your exposure. That just doesn't make sense, right? I mean, it's a dangerous way to have an investment strategy. I know our Muni group, and talking to them when COVID hit, and they had the benefit of understanding already the credit worthiness of various states and municipalities, and then they could pivot when they looked at it and said, "Wow, this is going to impact." Certain sectors are very vulnerable to this: healthcare, transportation, and other sectors are immune, so they can pivot their investment strategy to take advantage of those moments very quickly because they have that deep understanding.
You've got better technology, you've got systematic strategies, all of which have shown that humans are not very good necessarily at consistently picking winning securities over the longer term. I mean, that's just kind of what the numbers bear out. So over the longer term, does technology win out?
The data is going to be very, very important. But here's what data doesn't tell you. When something externally changes, the Fed changes their policy, the ECB changes their policy, there's some regulation that comes in, you have to have the combination of both people and data. And that's where I think active management is evolving, where you're bringing those two things together.
Do you think we'll see the move from active to passive slow or stop in the next couple of years?
The big question that I think, you're seeing is with the percentage of passive, does that become kind of a self-fulfilling prophecy? It's fast on the way up, and we saw it in those couple of months. On the way down, it's even faster, right? There's no buy bid on the passive model on the way down. Active's going to shine as the next decade's going to look very different from the last. I mean, there's a lot of sensitivities that companies are going to have to be able to maneuver, including supply chains. And so being able to fundamentally get under the covers and understand the impact of these types of decisions is going to be important. And then, of course, ESG, I think, is an area that you benefit from active management.
ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on. Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
When you look at your rivals in the fund management industry, it's clear that some were positioned pretty well for some pretty big shifts. BlackRock, for instance, with the rise of passive and ETFs that target specific sectors or markets, Eaton Vance with tax-efficient products. What do you think is the next big shift in the industry and therefore for Franklin Templeton to capitalize on?
So I think customization is going to be very important. And I think that people often discuss ETFs as being synonymous with passive, and it's not really that. An ETF is just a vehicle to deliver capabilities. It has different characteristics than other vehicles like SMAs or CITs, collective investment trusts. And so what we view as Franklin Templeton, we have investment capabilities across the full spectrum. We will deliver them in whatever way in which our clients want them delivered, in whatever vehicle, including really customized separate accounts. And that's where technology is enabling you at a much smaller account size to deliver more customization. So I think that we're going to see more of that.
So that leads me to my next question. The 60-40 portfolio is kind of the bedrock of the modern asset management industry, but we know that the relationship between asset classes has changed quite a bit. People buy stocks for dividend payouts, for income. People buy bonds to participate in price rallies, and interest rates are lower for longer. Is 60-40 dead?
I think 60-40 is a blunt instrument, and we have more tools to fine-tune the management. Now, you also had an issue with the 60-40 in that a lot of institutions had, say, a 7% target, and their fixed income was yielding such low returns that they found themselves having to move further on the risk curve. And so you saw them go into alternatives. So I think the real answer is it's not that 60-40 was bad. It's just that we have better tools to fine-tune for folks' individual goals, and you're going to see more of that customization.
When we look at what's going on, there's a ton of liquidity floating around. There's an everything rally where risky assets and safe havens are both rising. What do you think success in the asset management industry hinges on most in that kind of environment? Is it alpha generation? Is it leveraging scale? Or is it something else?
So I think the key for the asset management is what value are you bringing to your client, right? And so really understanding what your client's needs. If it's a pension fund, it's a series of cash flows, liability-driven investment. They need portfolios that are structured for that. I think what's happening on the retail channel is because the world's gone to fee-based, clients are looking at their financial advisor and saying, you know what, it's not enough that you just give me an investment portfolio. I want you to help me do financial planning. I want you to have a tax efficiency in this. I may even want you to educate my children on how to be financially savvy. And so as those additional demands are coming on us from our clients, it's about meeting those needs and really showing value for what you're paid.
And meeting clients' needs also means expanding your product offerings. You have a venture fund, you have private equity, you have private credit. How are you building up these different areas? Are you doing it through acquisitions, or are you building it up on your own internally?
So it depends. We were fortunate to get Clarion, a really phenomenal real estate manager with the Legg Mason acquisition. In general, private assets are a little bit difficult to buy because the people selling them, I say, they always have more information than you do. And so, we have taken the approach that at times we'll buy it. We bought Benefit Street Partners, and that was private credit. In the case of private equity and venture, we've started to organically grow our own. We're headquartered in the heart of Silicon Valley. So I like to say we have social events we used to pre-COVID with a lot of these entrepreneurs as well as venture capitalists. And so it gave us kind of a front row seat to that. So that approach was more of an organic approach.
How much more consolidation do you think we'll get in the asset management industry? Are we in the second inning, the fourth inning?
So there's certainly been predicting for the last probably at least 5, maybe even 10 years, there was going to be this massive amount of consolidation. And you start to see it. There's been some big deals. I think that the pressure on the industry on fees is going to have a push towards consolidation. I think the investments required in things like data science, and when I talk about data science, it's investments in AI, investments in natural language processing, all those supporting the investment teams. I haven't even talked about the investments on the fintech side for distribution. I mean, there's massive amount of investments that have to happen there. One of the key drivers on our Legg Mason deal is we knew we had to have cash on our balance sheet. It was very important to us. Post-deal, we have $5 billion in cash and investments, precisely because we want to have the flexibility to continue to make these investments. That's hard to do when you're small.
Franklin Templeton is known for Mark Mobius, who left the firm in 2018, for its emerging market prowess. Obviously, things have changed and you've grown through acquisitions. What do you think is the Franklin Templeton brand now? What do you want it to be known for?
We want it to be known for helping people solve the most difficult problems that they have in their life. And I think that actually as an industry, we got to do a better job talking about what we do. I think we're often by the media thrown in as just, you guys are a bunch of greedy Wall Street people. The reality is I can tell you the colleagues that I work with, my peers in the industry, really try to focus on what's doing right for clients. And if you think about, you think about as we're having an aging population, as people are moving into retirement, are they saving enough? Have we helped them save enough? Do they have the appropriate strategies as they're living longer to ensure that they can stretch out what they've saved? If you have, if you know somebody who has a special needs child, one of the great fears is, will there be enough money once I'm gone to ensure that this child is taken care of? Those are the things that are real. And then you just think about what's happening today with vaccine development. These are public companies who are out there who are using the dollars of our shareholders, right? The investors and the profits and trying to develop really important needs for society. So to us, Franklin Templeton is a part of this. We are helping people solve the most important goals in their life.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it. That makes me confident that we are going to do everything we can to determine safety.
The
business of asset management is really based on the idea that humans can beat the markets in a meaningful way over a long period of time consistently. Some would call that an anachronism. It's certainly a goal. I think about the people who do that job, star fund managers. We don't hear about them anymore. Why don't we have them anymore? Why doesn't the industry promote them anymore?
You know, I mean, the interesting thing with the star fund manager is that the reality is they were always supported by a large team. I think maybe it was easier for people to connect and maybe from a marketing standpoint, we'd say, oh, it's, you know, X person who's really behind this. But the reality is it was always a team. And so that's one. And then number two, clients get nervous by star managers, if you point one, because then it becomes a succession issue. They want to know that you can seamlessly are developing the team behind, just as any CEO is expected to be developing the team behind them.
Yeah, but star fund managers help differentiate different firms. Mark Mobius was always tied to Franklin Templeton. If you don't have someone recognizable, people can turn to price as their primary driver, and then it's that much easier for them to go to a passive product or to an ETF.
You know, you're going to have to show value. We've talked about that. There's no question you're going to have to show value. And I think people like to understand the strength of the team versus a single individual making all the decisions, that they recognize that that's just not credible with all the information you have to gather, the deep understanding that you have to have in individual sectors and analysts, that it's just not credible to say one person can do all those things.
When we talk about fund managers, at least in this country, it tends to be he or him. Why have we not had any female star fund managers? And do you see that changing?
Well, you know, it is something that we're very focused on. And we've had as high as, I think, 27%. As we've done acquisitions, that's diluted our number a little bit. But I think we were always a firm that had a lot of strong women as managers. I think that the industry is learning, you know, we are involved in something, Girls Who Invest, get girls interested earlier in this business. But part of that's also, my daughter said to me, you know, Mom, I don't really want to go into your type of business. I want to help people. And I'm like, this business helps people. And so if we can articulate it in that way and get to girls earlier, I think that you're going to find more are attracted to it.
If attracting and retaining women is as important as we claim it is, how directly tied is that to how you're thinking about remote work plans?
As a mother of 5 and as the daughter of a mom who had 7 children and then graduated from Stanford Medical School, you know, I think that moms have to figure out how to blend work and home life really, really well, which means we need a little bit more flexibility. And so I think that this whole work life, one is you take out the commute, you know, 2, you can get up and take care of whatever you need to get up and take care of. So I think in many ways it will play to the strength of women. I also think that men have been a little bit disadvantaged. And I know a lot of men that would love to coach their kids, you know, sports teams, and yet they weren't sure that was okay in the office. And so I think this environment's actually going to allow both parties to do more of this integration between home and work. And I think that's better for everybody.
Do you think the male leaders in finance and other industries see this crisis the same way you do?
So it's been very interesting listening to other CEOs' views about whether this new work is permanent, or are we going to absolutely go back to where we've been? And we have our own question around, you know, sort of what does the office look like? You know, I think the reality is you've got a top performing employee who, you know, commutes 3 hours a day, 90 minutes each way, not an unusual commute in, say, New York City. And they're just realize they can do a lot of their job from home. I think we're going to all have to learn to figure out how to accommodate and leverage technology to create those kind of collaboration opportunities. So I don't know quite what the world's going to look like. I mean, it is a debate we have, but I think it's going to look different.
Jenny, you are the 4th member of your family to serve as CEO of Franklin Templeton, to lead the firm. How do you reconcile that and your efforts to promote diversity at the firm with the fact that this is ultimately a family-run business?
Well, so first of all, we're a public company, and while the family has a significant interest in it, we're minority shareholders. We don't own a majority of it. So we have to run it every day as a public company and think about what's right for the long run. I'd say the one difference is that when you have still founders having concentrated ownership, they're really able to think more long-term as far as investments that they make. You know, one of the risks today of public companies is CEOs have so much pressure for quarterly returns that sometimes there's a question about whether they're really making the best long-term decisions for the business. And I can tell you, we operate this company thinking in the long term for the business.
I want to talk a little bit about what happened with the Amy Cooper situation 3 months after that unfortunate incident. I wonder what has changed at your firm. How do you monitor employees' behavior and stay on top of what they say and what they do?
So, you know, part of it is you have to, from the very top of the firm, behave in a certain way and just show zero tolerance for any kind of racism or discrimination. You know, at my core, I fundamentally believe, and I believe their executive committee fundamentally believes, that a diverse workforce is better for us, better at decision making because you're going to get more views, better because it reflects our diverse client base. And so it's about, for us, continuing to always rethinking how can we ensure greater diversity and inclusion. And as I, we hired prior to the incident in Central Park, the chief diversity and inclusion officer at Legg Mason, and Regina Kerr is reporting directly to me as a CEO. That's how important D&I is to Franklin Templeton.
D&I is clearly something that you're very passionate about, and I can hear it in your voice. I can see it in the way you're talking about it. How do you think your lived experience heightens your perception of what's happening on the diversity front?
You know, in some ways, I always feel a little bit, obviously I'm a woman CEO, but I, grew up in a household where my father celebrated strong women. I mean, my mother I think she was one of 10 women graduating from Stanford Medical School. And so, I've always grown up in this environment where there's just somebody who believed in me. And I think that makes a big difference. I was asked by an employee at one point, well, what do you do when you walk in a room and you know that all the men are thinking that you're not capable or, competent? And I said, boy, I've never walked in the room and thought that. And by the way, never let that be in your head, right? Why use up any of your mind share to think those things? So I think I'm very fortunate, but, you got to talk to people. You got to listen to people, and so that you can understand what their experiences are.
That wraps up my front row conversation with Franklin Templeton President and CEO Jenny Johnson. Stay tuned to Bloomberg Television and Radio for more exclusive analysis 24 hours a day. Stay safe, everyone. I'm Scarlett Fu. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
With Election Day quickly approaching and the coronavirus pandemic still in full force, mail-in voting is more politically charged than ever.
Mail-in ballots are very dangerous. There's tremendous fraud involved and tremendous illegality.
The reality, this isn't a partisan issue. We have Republican secretaries of state like Michael Adams in Kentucky, who has said that vote by mail is the safest way to vote.
As increased election uncertainty begins to worry investors.
You know, it's interesting. I think the risks of a contested election are high.
As administration officials continue to encourage in-person voting across the nation.
People are very proud to show up and go to the polls. They really are. I mean, they wait in line at Georgetown Cupcake for an hour to get a cupcake.
State and local authorities warn of delays in the results.
Even if we did everything perfectly, we still have so many outstanding ballots that we won't know who the winner is in many races until probably Friday of election week.
Join us for a Bloomberg special report, 2020, Year of Crisis, Vote from Home. Hello and welcome. I'm Kevin Cirilli. Americans have been voting by mail since the Civil War. But in the midst of the coronavirus pandemic, mail-in ballots have taken on new significance and partisanship. In this special report, we look into mail-in voting, the pros, the cons, the political debate, and the simple mechanics of delivering election results on November 3rd. We begin with an interview with Maryland Governor Larry Hogan, a moderate Republican.
You know, I think what we're doing here in Maryland is an all-of-the-above voting system where you can vote by mail, you can vote early with early voting, or you can vote on Election Day. We attempted to do a mail-in only situation in the primary elections, and there were some real difficulties with our independent state board of elections that couldn't administer it properly, and we had only a handful of precincts open that were overloaded and overcrowded, which was a tough situation. So this time we just decided to go forward with let's encourage everybody who can to vote by mail. If those who can't or don't want to can go to an early voting center, distance, safe, with all the PPE that they need, and some people can still go and vote on Election Day. So if we spread it out over all three of those things, hopefully we'll give every single person a chance to vote, make sure we get maximum participation, and we'll do it in a safe way.
If people want to vote by mail, do they have the right to do so? Do they have to request a ballot?
We're going to send out an absentee ballot request to every single registered voter in the state.
A request?
Yep.
Okay, so you mentioned that there were some challenges. There's this debate that's been happening right now. I'm curious, is it your position that we're just too close to the election day to try to change this dramatically for the entire country? And are other governors saying that? And should this have been a conversation that was had 2 or 3 years ago as opposed to just a couple of months before November 3rd?
Well, you know, we're in this crisis, so it's a little bit, you know, we're trying to address the problems of keeping people safe while also encouraging people to vote. And so it's hard to figure it out, and each state is going about it a little bit differently, and I know there's a big argument about whether you should be able to vote by mail or not. We've been doing that for 20 years in our state, and it works very well. We're just trying to make it easier and encourage more people to do that, but there are a certain percentage of the people that, that still, as we showed in our primary, still want to show up and vote. We're going to make sure that they can do so in a safe way, but it's very difficult. So less than 110 days till the election, and to change all of the precincts across the country, it's an interesting debate, but it's also a challenging logistical problem.
As governors like Larry Hogan rush to bolster state election infrastructure, voting rights activists are trying to ensure that elections remain free and secure, even in a pandemic. Stacey Abrams is a former gubernatorial candidate in Georgia and chair of Fair Fight Action, an organization she founded to ensure voter protections. And just as a note, Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a contributor to Fair Fight Political Action Committee.
Well, the structural requirements are 3. 1, we have to have expanded access to mail-in ballots. Number 2, we have to have expanded access to early voting in the states that do not permit it. And number 3, we have to have preservation of in-person voting on Election Day without a reduction in polling places. The HEROES Act will accomplish all 3 of those things by giving the states the resources they need. And the reality, this isn't a partisan issue. We have Republican secretaries of state like Michael Adams in Kentucky, who has said that vote by mail is the safest way to vote. We've got Democrats who've been calling out the same. And we know that states across this country are being forced to slash their budgets because of the COVID pandemic, and that the reason we have a United States of America, the reason we have a federal system, is that it's the responsibility of the federal government to step in moments of crisis like a pandemic and support the states in executing the constitutionally required November election. These are things that can be done, but we have to put aside partisanship to make sure it happens.
Should every American get a mail-in ballot in the mail without having to request one?
Every American who is eligible to vote should receive a ballot that is postage paid. That is absolutely the right thing to do. That would be the gold standard. But I live in reality. And so what I'm asking for is that we remove as many of the barriers as possible, that we put guardrails in place to ensure that everyone who wants to vote by mail can do so. However, we have to remember that not everyone can or should vote by mail. If you are disabled, if you have a language barrier, if you have legitimate, if you are homeless, if you've been displaced by COVID, there are a number of communities that simply don't have the right or the capacity to vote by mail, and they need to be able to go in person. And that's why we can't simply focus on vote by mail. We have to be able to walk and chew gum at the same time, do vote by mail, in-person early voting, and election day voting without a closure of precincts.
I hear you on this, Leader Abrams, but I got to press you here because we're just, a couple of months away from the election. And, I'm curious whether or not the bureaucracy in the federal government, at the U.S. Postal Service, for example, whether or not they are actually prepared to handle the influx number of ballots that could be coming their way. How do we guarantee that the institutions that are really going to be on the front lines of counting the votes for democracy are adequately prepared for the potential of a massive increase in mail-in votes?
We start now. We make certain that our Congress acts now. The House has taken action. If the Senate passes the HEROES Act, it includes the guardrails we need, includes the resources we need to make certain that the U.S. Postal Service isn't weaponized by Donald Trump to block access to the right to vote. It ensures that states and local governments have the resources they need to scale up absentee balloting. It ensures that we have the poll workers we need to do this process. But we also have to tell people it's going to take longer than 11 p.m. on election night to know the answer. When in the midst of crisis, we have to adapt. And that adaptation is not only possible, it is necessary. We also know that every single state in the country has the capacity and the infrastructure for mail-in voting. This is about scale, not about capacity. And if we get the resources to scale this up, as Vice President Biden has called for, as Republicans and Democrats have called for, if we do what Tom Ridge, a Republican, has called for, and what good Democrats and Republicans are calling for across the country, we can make this work.